This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I didn't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, John Tucker in for Lisa Mateo 2 days in a row.
I know.
She's back tomorrow. Relax.
John Tucker here for Lisa Mateo. Michael Barr as well. Say good morning to you. Is there any news in the last 12 minutes? Have we cleared up the uncertainty?
No, you were calling for news yesterday, Tom, during your surveillance programming. As soon as you left,
it
boom, there you go. And then we had the doubling of the tariffs on Canada, but are we walking those back now?
But then we walked them back 2 hours later.
Yep. So
we're not going to walk back anything in the morning. We're going to walk back good conversation. Michael Purvis is in studio right now. We'll get to him in a moment. Sonali Basic's going to be along on the difficulties Wall Street's having, particularly here on Manhattan Island. Mark Zandi's been on fire with some good economics and hugely anticipated this on the international state. Leland Miller will be with us with China Beige Book, and Adam Posen of the Petersen Institute. We could talk to Dr. Posen for an hour today and still have things to talk about. Futures, they bounce up. Don't ask me where we are in an hour. Futures up 40 right now. The VIX from that 28 level comes into 25.99. To get to Michael Purvis quickly from the Interactive Broker Studios, the Bloomberg Business Flash, John, you're not Lisa Mateo, Tucker.
Right now, futures indicate a higher cash open. Dow futures up 202. S&P E-mini futures up 40. The NASDAQ futures right now up 164. After yesterday's 0.75% decline for the S&P 500. Big focus, of course, inflation print 830. CPI forecast to come at a 0.3% rise. That's on a month-over-month basis. Goldman Sachs, latest Wall Street firm to lower its forecast for the S&P 500. The year-end target now 6,200. It had been 6,500. Roche Holdings and Zealand Pharma surging after the drug makers teamed up in a $5.3 billion bid to challenge Novo Nordisk and Eli Lilly in the obesity drug market. Intel shares, that's actually the most active right now, up 8.5%. Reuters reporting TSMC has pitched NVIDIA, Advanced Micro Devices, and Broadcom about taking stakes in a joint venture. And finally, Metallica debuting a concert film on Apple's Vision Pro headset. The self-titled 26-minute film shot in this past September. It's going to be available as a demo in Apple Store locations worldwide on Friday. Look out for that.
Metallica.
Should we do all Metallica today for outros?
That'd be a little much, maybe.
A little much. We'll see. Are you done?
I'm done.
John
We check
Tucker,
the markets
thank
all
you.
day long. Back to you.
John Tucker, thank you so much. Michael Purvis wrote a brilliant note on yield dynamics 10 or 12 days ago. No one cares. Joining us now from Tallbeck is Michael Purvis. How do you write a research note given this uncertainty?
Well, you write a research note and then you write another one the next day, and then another one there. But I think, I think one of the things that I wrote up last Friday was about the Trump put, because there's this sort of concept of we're just in the discovery prices of what the strike price is on the Trump put. My question is does the Trump put, if exercised, if we get to 4,800, pull us a bear scenario, we're going to 4,800, and all that. And then everyone's, okay, we're going to get the Trump put. And let's say we actually see that Trump put. Will it work? Will the Trump put work if exercised? I think is one of the important questions, because it's very different than what I would say than say a Fed put. A Fed put, has a lot of years of history, but it's also a very clear sort of path of dynamics that are established. So, for example, if it was 2015, right, and the markets got ugly, the Fed might say something very dovish, and then the bond market reflects that, and then the equity market reflects that, right? But here, we're talking about, it's hard to imagine Trump just going back to reversing everything the way it was before he started his second term. But even if he were to do that, right? What is the transmission mechanism? Do CEOs believe that? Do foreign leaders believe that? Do do consumers believe that? Do the markets believe that, right? And so that's why I think this concept of the Trump put, ultimately, you have to really contextualize it and consider that it's really not a Fed put. It's a very different thing.
It is. And one of the results is, just uncertainty in the marketplace. We've talked about it. Torsten Slok, our good friend over at Apollo, is out with a note this morning. Small business uncertainty, according to the February NFIB survey, is at record levels. So that can't be good for the economy. That can't be good for investment. And arguably, that can't be good for markets.
Yeah, I haven't seen his note, but I think he's probably referencing there's some components there that have really fallen a lot. Now, the headline number in that survey had one of the sharpest jumps on record, higher on the election, right?
Exactly.
And so
things have turned.
But those survey numbers, you go back to that survey jumped high on when Trump passed the Tax Reform Act of December 2017. Everyone was rah-rah. And then if you looked at what do small businesses want to do on CapEx, that crumbled 9 months later, right? And so watch what they do, not what they say, I guess, is one of the messages from that.
Yep.
But yeah, I think you're certainly large company CEO surveys. That sentiment jumped, but not nearly as much as the small business back after this election in November. I think there's you're just seeing it reflected in earnings already. You're starting to see it in obviously like the UMich data for sentiment.
Is the bull market broken? Just you're going to be up.
Look, I've been very bullish for a long time. I can't, like everyone else, I came into this year bullish. But I will say this: I think there are questions that are getting really pushing, on my radar here very closely, which is that Trump's art of the deal is about unpredictability. Markets and the economy need clarity. I don't think we're going to get that. That, to me, results in some level of multiple compression. At the same time, and we don't know this yet, but if we do start seeing really, earnings vulnerability here, then you're going to have earnings compression combined with earnings not being quite as robust or missing expectations for the year. And that's a recipe for a bear market. It doesn't have to be a tragic bear market, but I certainly could see a dip not getting bought. I think the concept of what we saw, this frantic dip buying last year, that's out the window for me.
Bloomberg Surveillance this morning. We start strong with Michael Purvis of Talbot, and we welcome all of you on your morning commute. Special good morning to the loons. I don't know which way they're flying. They're flying up to Canada.
Are they? Okay.
They land in New Hampshire on their way up to Canada.
All right.
Something like that. We say the loons of New Hampshire. Good morning on 92.9, and good morning on YouTube as well. Do the loons migrate?
I don't think they do. No, I think they stay on their lake and then they make weird noises.
The gannets,
those
the
are the bird
gannets,
loons.
those are the ones that are migrating back by the thousands off my backyard into the water.
Where are they going?
They're going back to Nova Scotia.
They think the winter's over, so they're done? They're coming back?
They're going to make a stop over in Sandy Hook Bay and go fishing for a while.
Okay.
It's fascinating to watch.
The fish are terror-free.
Yeah, exactly. For now.
All right, Michael, given this certain level of uncertainty into the marketplace, what do you tell your clients to do these days?
Well, look, I think, you're seeing 10-year treasuries with still very high real yields, right?
Mm-hmm.
I think that looks very attractive. The yields on 10 years are basically the earnings yields on the S&P 500, right? There, so I think that's a safe place to go. But I think the other thing, is that if when you think about Europe right now, so we have uncertainty here, and there's still a ton of uncertainty, of course, on every country right now because of what's going on in D.C. But I think Europe has, or certainly Germany has, a North Star now that they didn't have before. And if you actually look at, even before all this Ukraine, NATO stuff developed, you started seeing Europe economic data surprise to the upside over the last few months. You're starting to see earnings accelerate higher there than they are here in the U.S. for their sort of cyclical and value counterparts. You're seeing financial conditions getting better. You're seeing, of course, this looks like a really significant fiscal expansion from Germany. At the same time, we're going through fiscal contraction. So everything is it's a mirror it's a very it's a very different condition there.
I just refuse to be this defeatist. I mean, are you saying sell your Apple? You've owned Apple since time began.
I think big tech, clearly it's leading the way down. It led the way up. There's a lot of momentum. There's a lot of overvaluation coming into the year.
But we're going to still need our iPhone 2 presidents from now.
So Tom, what I'm going to sort of dissect this. What I'm saying is that if you are long big tech, you're long Microsoft and Apple and those companies that have very unique business models, very unique attributes, and you're rotating, what I'm making the argument for is that maybe not rotate into U.S. cyclical and value, but rotate into Europe, which is a different basket of cyclical and value but very different dynamics. And still, even with this run up, still on several measures, much cheaper than the U.S. counterpart. So to me, it's not necessarily at the expense of Apple. It's more about as where do you want to be exposed for cyclicals, given all of this stuff is going on.
It's amazing. I mean, just since August, the DAX, the German index, is up 31%.
Yeah.
Holy cow!
And if you look at things like the SX5E, the broader index for Europe, relative to say the Russell Value Index in the United States, it has been climbing. It has been much higher over the last several years there, and the valuation, the relative valuation, still favors Europe as well. So, the big question, of course, is, we've seen Europe, it's been 10 years of underperformance and okay, are we just crying wolf again? But I do think that they have a North Star now that we absolutely do not have.
The North Star being that they're going to start investing in their infrastructure, start investing in their military.
Yeah, the case I've been making over the last few weeks is that they have, did Trump make Europe great again by forcing them into this corner, and they're saying, okay, we're here now. We gotta fight. We got to do this there. So again, there's a lot to be said for the reforms and getting this stuff done. But I think now the harder Trump pushes on this, the more they are forced to sort of galvanizing. Certainly within Germany and they can actually afford to expand their balance sheet. Right. In the U.S., we're cutting our balance sheet. So that we're going into fiscal contraction. They're going into fiscal expansion at the same time. And interestingly, you're seeing a stronger euro out of that, and partly just simply
because... Do you see, this is an important statement in terms of the mess everyone feels in right now. Do you see any evidence that our elected brethren on Capitol Hill want fiscal contraction?
Look, I think when you're talking about fiscal contraction, right now, the federal government's outlays for entitlements and interest payments are 19% of GDP. You take a big chunk of that away, let alone the discretionary, you're talking about economic contraction, broadly speaking. And then, of course, there's spillover effects. You shut down a federal office, the sandwich shop down the corner.
I see a GDP move, but on a debt and deficit move, aren't they just going to take the Department of Education and build another aircraft carrier? To make it simplistic? Well,
there's always that there, but I think the other thing is that if we do get contraction, right? If we do get economic contraction, because of DOGE, because of tariffs, the deficit is going to get increased simply by the virtue of the fact that tax revenues are going to go down. You get into economic contraction, you're talking about a lower top line for the U.S. government. So it's the deficit. Getting this deficit lower, coming out of 4.1% or whatever unemployment and a strong GDP, is not going to be an easy exercise, right? Yeah. I mean, the bar is really high, and you have to manage that process very, very carefully. It's not an easy thing for anyone to do.
So if technology, which has been the leader in this market for as long as we can all remember, if it's not going to be the leader, can this market move higher?
I think the idea of cyclicals and values, if it is led higher by cyclicals and values, it's not going to be a 20% year for the market cap weighted index. I think that's some reason why some active managers always want a rotation because it's an easier index to beat, right? But I think right now, for the here and now, we're looking at big tech is leading the way down. They led the way up. The winners are going to get sold first. I still think there's more earnings vulnerability though in the other 493 stocks than there is in the big. And the other thing is that you look on the price earnings to growth ratio, even at the highest levels of the most overextension, they're still more attractive than they are for the cyclicals and the value stocks in the United States.
Okay.
So I think that's at some point when the dip does get bought, for me it will be probably an easy decision to go with big tech.
Let's do it again next week. Michael Purvis, thank you so much for Tallback, and a great brief to get us started this morning. And what's so important there is you can take all that, synthesize it into your view into an hour and 15 minutes from now, the CPI report. We'll go beneath the headline data, the voluminous inflation report that we will see there at 8:30. There's a lift to the market. There's no question about it. I got a 1% move on NASDAQ, 0.8% move on Standard & Poor's 500. S&P futures up 43 points. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and John. The House has passed legislation to avert a partial government shutdown and fund federal agencies through September. The measure passed on a 217-213 vote and now moves to the Senate, where bipartisan support will be needed to get it over the finish line. Senate Majority Leader John Thune says Democratic senators will have to vote in favor or take the blame for a government shutdown.
At this point, there's really one solution on the table. It keeps the government funded. It addresses the core issues I think a lot of Democrats care about in terms of programs that they want to have funded through the end of the year. And we think it represents the best solution at the moment.
Senator Thune says 60 votes are needed to pass the measure. The European Union launched countermeasures today against new U.S. metals tariffs, with plans to impose its own duties on up to $28.3 billion worth of American goods. The announcement came hours after the Trump administration imposed 25% tariffs on steel and aluminum imports in a huge escalation of the trade war between the long-standing allies. The NTSB has two emergency recommendations after that deadly mid-air collision between a military helicopter and an American Airlines plane back in January. Bloomberg's Amy Morris reports from Washington.
NTSB Chair Jennifer Homendy said there were more than 15,000 close proximity events between helicopters and passenger jets in just 3 years between 2021 and 2024 near Reagan National Airport.
The existing separation distances between helicopter traffic operating on Route 4 and aircraft landing on runway 33 are insufficient and pose an intolerable risk.
Investigators recommend helicopter traffic be permanently banned near Reagan National during certain periods and that the FAA designate an alternative route that could be used. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Paul Sweeney, I'm guilty of this in that the average stock I saw somewhere, I'm going to give Sam Rowe credit, is down 30%.
Wow.
3-0. You know, I mean, there's a lot of dogs in there, I guess. Like Disney is down 15%.
Yeah.
From the recent March peak. It's down like from the December peak, even more so. But we're all focused on stocks that have pulled back 10%. We're all feeling happy because these are all cash flow driven stocks. And the bottom line is, you know, there's a lot of stocks out there getting absolutely shellacked.
Yeah, I think, you know, just yesterday, what we heard yesterday morning from some consumer-facing stocks, whether it's the big airlines cutting their outlook or whether it's some of the retailers like Kohl's cutting their outlook on concerns about the consumer, I think what we're seeing from a lot of these companies, particularly ones that deal with the consumer, like a Walt Disney company with its theme parks and all that kind of stuff, is saying, hey, there's a level of uncertainty out there that we think is going to impact consumer spending going forward. And that's kind of what we're seeing in some of the commentary from some of these companies as they think about their forecast. And Disney's probably right in that group there.
How do you look ahead on a conference call? It's like the Detroit Tigers trying to look ahead deep into April.
Deep in April.
They had an IL yesterday. They had not Garrett Cole. I mean, that's tragic, but everybody's hurt.
Yeah.
You know, what do you do in a conference call?
Yeah, I know. I think people I think these management teams, I think they say, with less confidence, we're not going to go out on a limb and say we're going to grow our revenue.
Exactly.
You know, and so you had, you know, some of these retailers like Kohl's says, you know, their revenue is going to be down 4 to 6% this year, and they thought it would be kind of flattish before.
So bring the conference call back to the sell side analysts. They're not going to be able to write a report. Michael Purvis is going to be. Are we going to be out of business?
No, I just think people are going to be just much more cautious in their outlook here, and you'd rather under promise and over deliver here until you get some better visibility, if you will. And quite frankly, I'm not sure when you do get better visibility here. Maybe with some clarity on the tax situation. But again, at the end of the day, the noise factor coming out of Washington, D.C., I'm not sure that dissipates anytime over the next 4 years.
Speaking of overpromise and underdeliver, John Tucker, do you think that if we have no forward view, uncertainty, the sell side can't write reports, we lose our jobs? I mean, is it feasible?
You and Paul, yeah. Michael Barr and I, we're
Always
set.
news.
Always news.
Exactly.
We will hope for that. I will say this. I've said this in speeches, folks, before. Since 2007, almost Paul, every single day.
Every day, yeah.
Every day is like you can't make it up. And right now, we thank you so much for your interest, particularly worldwide on YouTube. I got a 16-year-old from Sweden. I'll talk about that later. Emailed me yesterday. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And ahead of the cash open and ahead of the CPI at 8:30 Wall Street time, futures higher. Dow futures up 258 points, a rise of 0.6%. S&P E-mini futures up 47 points. That's up 0.9%. The Nasdaq futures up 198 points. That is a 1% pop right now. CPI forecast to come in at a 0.3% rise. This is on a month-over-month basis. The S&P 500 predicted to fall as much as 3% if inflation comes in hot versus a 2.5% gain if it's cooler than expected. Well, as the S&P 500 flirts with correction, you mentioned this earlier. Liz Ann Saunders, she was on the program yesterday on Bloomberg Radio. Beneath the surface of the index, at the average member level this year, the maximum drawdown level is 14%, she pointed out. For the NASDAQ, it's more than 30%. The average U.S. 30-year mortgage rate declining for a sixth straight week. The contract rate on a 30-year mortgage slipping 6 basis points. Right now, 6.67, Paul. German 10-year rates hitting the highest since 2023. If you type WB on your screen, you'll find the German 10-year is up 3 basis points, 2.93. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. From Reuters, as they had a story out earlier on TSMC, this is on Canada. Canada to announce, I'm going to round it up, Paul, it's too early for decimal points. Canada to announce $30 billion in retaliatory tariffs Wednesday. Is today Wednesday?
Today is Wednesday.
I think it's this Wednesday, not next Wednesday.
Exactly. So we'll see.
But there it is.
Just every day.
We'll watch the tape to see what happens here. The VIX in a stick right now, 25.81. I'm watching the Sweeney yield as well, 3.96% out, 2 basis points. Higher yield, lower 2-year note price as well. But we'll watch it. We're going to see many more of these headlines today. Frankly, more in the Sweeney Steel Hour. Is Alex back today?
Back from Houston.
Is there a red eye from Houston?
Yeah, I don't know.
If you go north-south, it's not a red eye.
No, but she's not. She's all set. She was down there for a couple of days doing the energy talk.
Seema Shah with us right now. An important conversation. Thrilled that she could join us this morning. I assume she's in her London. She's Chief Global Strategist, Principal Asset Management. Seema, the tit for tat of the moment, how do you synthesize it into a global strategy?
Hi, Tom. Look, this is, I don't think we can pretend anything otherwise. This is a really challenging moment for investors. And the daily or even, the hourly headlines are really disruptive. What we're trying to do is, we recognize, of course, that there are headwinds, particularly for the US economy at this moment. So rather than just trying to fight that, what we're trying to understand is how resilient is the US economy to the various headwinds? In any single year, there's always going to be headwinds, but are households in a strong shape or corporates in a strong shape? So looking at that, balance sheets really do give us some reassurance that the US can avoid recession. If it can avoid recession, well, then you're going to continue to see positive earnings growth. And so, well, from an index level, it could be certainly a very turbulent time. You could see a number of 5% pullbacks this year, which is actually not unusual for a calendar year. But we still think that there'll be positive gains by the end of 2025. And then globally, a number of countries which have been, which we had thought would really struggle, have tried to shore up their defenses, whether it's from an economic side or, of course, otherwise. So we're trying to look at the valuation space, seeing where the best opportunities are, and trying to combine that where we're seeing policy responses that could also improve fundamentals. And then you get that big move up if valuations were already pretty cheap to begin with.
Seema, as chief global strategist, are you more attuned to what's happening in Europe as potential better growth opportunities, at least in the near term, vis-a-vis the U.S.? We've heard some strategists say, boy, Europe's looking a lot better here. And certainly if you look at some of the European indexes, really outperforming the U.S.
Yeah, absolutely. It's interesting because at the beginning of this year, there had been some increased allocation to Europe, but that was really based on a valuation perspective. And most people thinking it would just be a tactical play. And then you got, I guess, what was considered as good news because Trump didn't initially introduce tariffs on Europe. So you saw this further bump up. Now, actually, at the end of February, from a valuation perspective, any valuation differential between Germany and the US had essentially closed up. So there were questions of really how much further can this rally go? And then we got last week's news, which I do believe is a game changer. It's a fundamental change for specifically Germany and potentially for Europe. Now, I think that from here, given how much the market has rallied, there's going to be some potential for disappointment, a couple of potholes coming through, maybe one on the day that the tariffs are announced, potentially the defense stocks having gone a little bit too far and due for a slight pullback. But overall, if you're looking out over a 10-month perspective, actually Europe is now becoming an attractive destination for a strategic allocation, not just a tactical one.
So back here in the U.S. here, stocks, bonds, has your allocation changed at all? And do you expect it may change?
So I think like anyone, we've had to revisit the profile, the allocations that we have. So we are still risk on. We still have an overweight to US equities, but we have shifted the focus, any allocation that we did have to small caps, we reduced that, trying to go back into companies with their strong balance sheets, significant cash flow, etc. So those are the changes that we're doing within the US, and then an increased focus on global, as we just talked about. There are opportunities, China, Germany, pockets of LATAM that can stand do well. And then from a fixed income perspective, fixed income has become, once again, one of the most important parts of a portfolio because it's proving its worth in providing that downside potential. So slight shifts, but really trying to tweak it in order to make sure that we are protected to the potential downside economic risks that could be coming through.
The industry chit-chat, Seema Shah, and you've been brilliant at avoiding the chit-chat. Is it, well, I've got a 3-year, a 5-year, a lifetime hold on my retirement assets. You can ignore all this trauma. Baloney. What do you do, Seema, if you got a long-term hold?
Look, I think for the people who are approaching retirement, this is just a really, really tough moment in what to decide to do. So look, as I said, we're trying to think about those fundamentals. We're trying to think about where the market is going to go in just the next 2 months, but over the next year or so. So we're still thinking that you have to stick the course. You have to really be focused a little bit more on some of those safer assets, some of that higher quality stuff. But remember, compounding is really a very important friend to investors. Taking out your money, trying to time the market is always an impossible gain. So we have to be considerate of that, but also, keep keep watching the news. The daily headlines, that's noise, but there are some fundamental changes which are coming through. So I think for investors, we want to be still nimble as well as trying to ignore some of the more erratic
Paul,
changes.
get one more in here, but I was rude. I just realized I said baloney. I don't think Seema Shaw knows what baloney is.
Exactly.
You know, I'm sorry.
It's a staple of my
It's sort of like spam, Seema. Wait, Seema doesn't know what spam is.
I don't know what the equivalent is.
It's familiar to me.
Seema, how do you think the U.S. Federal Reserve is kind of observing all of this play out coming out of Washington and tariffs and trade wars and all those types of things? How do you think the Fed is looking at this?
But I mean, as much as investors being swept around, I think the Fed has too. Just a few weeks ago, potentially talking about maybe no rate cuts this year, and some people talking about hikes. I think that with the economic outlook having deteriorated in the last couple of weeks, but still being surrounded by a ton of uncertainty, both with regards to whether or not policies are actually going to be introduced, and then thinking about what the actual impact would be once they are implemented, they are almost stuck, right? So I wouldn't say that a cut is on the cards for certainly for next week, given that uncertainty that they have. It's really for us as you get close to that second half of the year that maybe things start to change. The inflation report today is going to be really important in that will they have the space to start introducing some monetary easing, which I think the US economy is really going to require. We're expecting 2 to 3 rate cuts in the second half of this year. If the labor market shows deeper cracks than we're anticipating, then we think the Fed is going to really refocus on that part of its mandate, and you could see more aggressive easing than that.
Seema, thank you so much. Greatly appreciate it. Next time I fly over, I'll bring, some
bologna
with the olives in it.
I didn't go there. I couldn't go that far.
Seema Shaw, thank you so much. With Principal SM, she's so polite. She goes, "Well, I'm familiar with spam."
Exactly.
Maybe we'll all be eating spam based on what the markets are doing right
Bologna
now.
and like the Kraft American cheese in the wrappers, that on white bread with some mustard every day for first grade through 8th grade. That was my packed lunch.
That explains so much.
That explains so much. Exactly. I survived.
Yeah, we survived. Remember, the president gets upset about paper straws. Remember the milk with the paper straws? It was terrible. We're trying to be a little light here, folks. There's a lot of trauma going on out there. Jack Fitzpatrick on earlier. Thank you to our Washington team, including good Jack Fitzpatrick, for trying to report on this. It's literally 24/7. I don't think Anne-Marie Horton has had 2 hours by herself in like 3 or 4 weeks. We're doing everything we can to bring it to you as we see oil finally a lift. I mean, gold not giving me a story. Even the dollar finally elevated a little bit here.
And your Bitcoin, Tom, is sitting here right here about just under $83,000 per
It's
token.
a little better, stability here. That's into the inflation report in less than an hour.
Who knows?
We'll do that. We'll try to cover it. I guess it's ancient data, but nevertheless can be market moving. Futures up 50, the VIX at a stick, 25.81. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by IBKR. Will the U.S. Consumer Sentiment Index exceed 70.3 in March 2025? At IBKR Forecast Trader, the yes was recently at 29%. Check the data, spot the trends, start predicting today at ibkr.com/forecast. Ahead of the cash open on Wall Street, Dow futures up 259. The S&P E-minis 48 points higher. That's up about 0.9%. After yesterday's 0.75% drawdown. NASDAQ futures right now up 194 points. That is a rise of 1%. And the headlines, just to repeat, Canada announcing $29.8 billion in retaliatory tariffs. That's according to Reuters. Of course, the European Union launching countermeasures today against new U.S. metals tariffs with plans to impose its own duties on up to $28.3 billion worth of American goods. Right now, Intel, most active pre-market, up just about 8%. This is a report TSMC is pitching a joint venture. Groupon shares, they're also jumping. The online coupon company delivering a revenue forecast for this year that beat the average analyst estimate. And Tesla is leading the pre-market gains among the Mag 7 stocks, with the electric vehicle maker set to rise for a second day. This comes, of course, after the rout on Monday, the 15% sell-off that we saw. Tesla shares right now up about close to 4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. It's your Bloomberg Business Flash. Paul and Tom.
Thanks so much. Futures up 48. John Tucker, thank you for that. For those of you across the nation, we're going to do this for 92.9 FM Boston.
Yeah.
And we can do this because Craig Brandon is with us right now with Eaton Vance. And, you know, it's about municipal bonds and all that. Some things end. We're talking about Lockover, which is this restaurant on Winter Place, like in Goodwill Hunting, the restaurants in the movie kind of thing. It's where you had a cigar. Like, I remember cigars at Lockovers. My grandmother would take me there, and my mother would go mental because of the naked lady painting. Lockovers ended. Things in municipal credit end. What are you worried about in credit quality in munis right now?
Right. So overall, the market's high credit quality, right? So the Bloomberg main index is, 71% double in AAA, right? So that doesn't really keep us up at night. But there are things that you need to keep an eye on, especially, in the high yield space. I think what we're looking at most closely now is what Medicaid funding is possibly going to do to hospitals and nursing homes, because really hospitals are about 10% of our index, right? And a lot of hospitals get a significant amount of their revenue from Medicaid. And remember, Medicaid, which is the low income insurance of last resort, it's partially funded by the states, partially funded by the federal government. And the amount that's funded by the federal government and states varies. So there are some states where a significant amount of their Medicaid money is from the feds.
So one of my doctors was chief resident at BU in Boston. That's like a real job. Paul and I don't have real jobs. That's like serious medicine. Is the muni bond medical risk a hospital in the middle of Iowa that nobody knows about, or is it those big university combines?
It's not the big university combines. They have strong balance sheets, and they have very dominant market share. It's more of the hospitals that serve, low-income parts of large cities. It's, like you said, Tom, the more rural hospitals that really, really rely on Medicaid funding, because if there really are cuts to Medicaid, and there's, the on-again, off-again Medicaid, just like on-again, off-again tariffs, are they cutting Medicaid or not? That could be a significant portion of a hospital's revenue.
And Paul, that's at 9% triple tax-free coupon you have.
You're preaching to the choir here. I've owned New Jersey municipals for decades. Talk to us about that tax deductibility. Is that at risk from any new tax plan from this administration?
Yeah, I don't think the overall taxability is at risk. Listen, I spent the mid to late 1990s working for the Ways and Means Committee in Albany, right? And I know how budgets are made. And you never say never, because in the middle of the night when you're negotiating a budget and you need to find revenue somewhere, things happen. But I would say for the most part, it's not really a risk. And the reason I don't think it's a risk is, one, I think local politicians get it, state politicians get it. As a taxpayer, if my federal taxes go down, but it causes my state taxes to go up, it doesn't matter to me as a taxpayer. And the analysis that you've seen is you can raise maybe, $400 billion over 10 years from the eliminating the muni exemption. But I've seen some estimates where it could be, $840 billion in extra costs to state and local governments on their borrowing side. So again, if my federal taxes go down, but my state and local taxes go up more than my federal taxes went down, that hurts me as a taxpayer. And I think people in Washington get that, because so many people in Washington cut their teeth spent their early years either at the local or the state level.
How has the muni bond market performed year to date amid all this policy uncertainty?
Yeah, I think, we've underperformed treasuries a little bit. I think the main index is up around 100 basis points. So we've definitely lagged a little bit. But, listen, I think a good scenario for munis is sort of a slowdown in the economy, a slow grind down in rates, because we tend to, be driven by retail flows. And when money's coming in the market, performance tends to be solid. When money's going out, performance is weaker. So if you see a slowdown in the economy, you see the Fed, start to talk about maybe, cutting, you see the 10-year Treasury maybe approaching 4%, that's good for munis because the credit risk on a slow, a slow decline in the economy is not that big a deal. But what you do is you get the wind at your back from lower rates because we're generally a high quality duration asset class, right? So if you're looking for high quality duration, sort of risk off, munis will follow treasuries. We might underperform a little bit, but we'll follow treasuries.
You know what I liked about the internet? I go in and I find the Lockover lunch menu from 1992.
Okay, what are you doing?
Michael Barr would have had everything on the menu here. I'm looking at the chicken pot pie a la Winter Place, $9.75. That would be $45 right now. Craig Brandon, thank you so much. Thank you for reminding me about Lockovers today. He is with Eaton Vance and with Morgan Stanley in Boston. And now with our news in New York City, he loves a roast beef hash with poached eggs. Michael Barr.
Tasty. Thank you very much, Tom, Paul, John. The European Union is promising tariffs on $28 billion in U.S. goods now that President Trump has slapped 25% duties on steel and aluminum imports. Bloomberg Global Trade Editor Brendan Murray.
What this sets the stage for is a number of talks in the coming weeks. Each one of these countries, the U.S. administration has a particular issue with the fairness of the trade relationship and some imbalances they want to fix. So the Trump administration is going to go country by country, trying to address what it sees as those unfair practices.
For now, Bloomberg's Brendan Murray reports the EU plans to reimpose metals tariffs from Trump's first term on April 1st. More than 1,300 federal Department of Education employees are expected to get dismissal notices as the administration works to fulfill its promise to dissolve the agency. North Carolina Democratic Congresswoman Alma Adams is on the House Education and Labor Committee. She says that the layoffs will impact schools and students in her district.
We're talking about in Charlotte, Mecklenburg, about 40,000 students that will be kicked off the program for free lunch.
Congresswoman Adams says they will fight this in court. The House has passed legislation to avert a partial government shutdown and fund federal agencies through September. The measure passed on a 217-213 vote and now moves to the Senate, where bipartisan support will be needed to get it over the finish line. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Drawdown 10% on the SPX, almost exactly.
Yep.
But this is important. David Sowerby, who was with us the other day, huge value add with Ancora out in Bloomfield. You're not from Detroit. You're from Bloomfield Hills,
Very
Michigan.
Nice. Very nice.
48304. Sowerby nails it. Average S&P stock is down 20.1% from each of their 52-week highs.
Yep. There you go.
That's
so
the
that gets your
carnage out
attention.
there.
Yep.
That gets your exactly.
It gets your attention.
Gets your
He's going to be
attention.
on at 9 o'clock here today.
Oh, he's here today?
Yeah.
I
How
did
about
not know that.
Sure.
My people didn't tell me that.
Okay.
It's unbelievable.
Just great timing.
Yeah.
So we're going to have him on there. That'd be, I mean, that just, you get that average stock down 20%. That shows you the pain is more broadly disseminated.
Liz Ann Saunders was on that as well. For those of you on Global Wall Street, please stay with us. Sonali Bassett coming up, and we're just going to talk about the blood out there. We're going to talk about the hedge funds. Come on, if you're a hedge fund now, I would be slaughtered.
Well, I mean, I mean, it's just, although they like volatility, so, if they like volatility, the traders like volatility. I don't know. We'll find out.
We'll have to see on that forward. Right now, futures up 45, Dow futures up 241, the VIX 25.95. There are headlines. We'll do a Canada headline here again in a moment, and we are awaiting announcements. Overnight, EU announcing retaliatory tariffs. Good morning.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Good morning across the nation, around the world. A special good evening on the Pacific Rim and over to India as well. We are humbled by the international reach of YouTube. Subscribe to Bloomberg Podcasts, growing each and every day. Again, Bloomberg Podcasts out on YouTube. They came to me a couple months ago and they said, Tom, you're such a gloomster. We want to do a show called Bearish. And I was going to do Bearish, and it was going to be just gloom, 60 minutes of gloom. They ripped up that script, and then got Sonali Basak. So look for it in May. Bullish will be out. Nice. And it really looks interesting. Some important conversations on global Wall Street. What's the conversation this morning at John Tish's Regency breakfast over on Park Avenue? The blood on the streets of Manhattan. How bad is it?
You know, people are trying to take it in stride, to your point. Even I have been trying to go out as much as I can and spend some time.
I'm shocked. I'm shocked. Redo, let me look over. Redo, are you shocked on the Amex? Okay.
Well, you know, before the market rout even started, Steve Cohen had his Lincoln Center gala. And so you're sitting there with all the traders from everywhere from Golden Tree to Citadel, and they're bleeding the next morning and kind of, again, taking it in stride. It's gotten worse since then. You have to remember that even coming into March, you had a lot of pain from February. So not a lot of dry powder to work with. Equity long short funds were down through February alone 0.5%. Long only funds down more than 3%, so more than the market, more than 3.5%. So tough times out there right now, at a time where people walked into the market getting $50 million paychecks per team, right? Yep. So, you know, this is shaping up to be a tough year.
Is there any sign that money's coming out of hedge funds, or is it too early to see that?
So one part of the market that is really interesting right now, Bridgewater. Bridgewater through February was up almost 10%. And by and large, you had macro funds still feeling some pain in February, but they have had pockets of areas where you've had real performance. So people are looking at macro funds. People are looking at the quant shops as well. One of the most read stories on the Bloomberg terminal today is from our brilliant Justina Lee about JP Morgan's quant cloning factory.
Quant cloning factory.
I love this story. Tom Keene was talking about Cliff Asness a little more in the commercial break. I got my degree in quant finance from all the AQR principals were the ones that taught me. So they learned from the University of Chicago. Then they went over to NYU and hung out with us. The quants are really interesting right now. I'd also talked to Ryan Tolkien over at Schoenfeld earlier this month. They were flat while everyone else was down, and the quants were why, is what he said.
In the time we got left, come on, they're going to rationalize every single banker, forget about Diamond, Moynihan, and the rest. Everybody with a shop in New York City's going to say, tighten it up to 4th of July. How bad are the layoffs going to be?
You know, it
Firings,
could be,
I should say.
First, the pressure is actually not even going to come at the banks. First, the pressure this year, and this is unusual, is at the private equity firms.
Private credit?
Private equity. They have been sitting on hordes of assets to sell, and they have not been able to sell them. They haven't been able to find a clearing price in a volatile market to get their assets sold, so therefore they can't make money, and they can't pay their investors. So it's a really tough equation, and the bankers I talk to are sitting there with their private equity clients trying to figure out how to sort out the mess in their portfolios.
How do they do that? What's the trend? I mean, it's like VC. We've talked to Rubenstein and others about this. What's the mechanism to clear private equity?
You know what's interesting? I'm speaking to Victor Koshla later today of SVP. One thing, he's looking at 200 deals right now, Tom. 200. He might invest in a dozen near term, but the idea there is you lend them money, and if it goes wrong, you take control.
Bloomberg Invest, which is your baby. I mean, the thing was like
great conference.
Like, I mean, you were there, right?
Yeah.
Was I there? No. Well, was I in a panel? No.
Do I get to have you there?
Well, we'll see. You talk to Tucker. He's my agent.
He's available.
What's this quickly? I got 20 seconds. Not even that. Tom Petty's more important than you. What was a single takeaway you took from your conference?
You know, Harvey Schwartz at Carlisle said it best. Buckle up.
Yep.
Buckle up. I like that.
He knows what he's talking about.
They were to call my show Buckle Up.
Exactly.
No. In May, bullish, Sonali Basak, Tom Petty to get us to break. Futures up 46. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, John Tucker in for Lisa Mateo. That ends tomorrow. We welcome all of you here. A lift to the market. Futures up 41. The VIX 26.02. You got a problem over there?
I'm not the one with the problem.
We're just happy to be here.
John Tucker killing it each and every day for us. A lot of good work there. Bloomberg Surveillance this morning. We're brought to you by Commonwealth, leading all of our economic data. Commonwealth supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support in technology. How do you run a hedge fund right now, Paul? Shinali was fascinating.
Well,
I don't get it.
I don't know. Just personal opinion right here. The hedge fund business was played out in 1994. That was or 2004, and that's when I just said no. Because they underperform on the upside. They underperform on the downside. I don't know. Long, short equity. I don't get it. But now the markets we're just kind of figuring out where this market's going to go, Tom.
Well, we'll have to see, and we're going to hang on the headlines as well. A couple headlines out this morning as well. Again, futures up 42, Dow futures up 223. From the Interactive Broker Studios of Bloomberg Business Flash, the wonderful John Tucker.
And right now, the futures indicate a higher cash open on Wall Street. We have Dow futures up 224. The S&P E-mini futures, after yesterday's 0.75% drawdown, right now up 42 points. That's a rise of 0.75%. The NASDAQ futures up 179. That is up 0.9%. So the latest tariff headline involves Canada. This, according to Reuters, Canada to announce $29.8 billion in retaliatory tariffs today. Of course, we get the inflation news today, 8:30 Wall Street time. Consumer Price Index. The Economist expecting an increase of 0.3% for the month of February versus the prior month's 0.5% rise. Shares of Intel right now, they are the most actively traded, up just about 8%. This on a report that Taiwan Semiconductor pitching a joint venture to run its factories with NVIDIA, Advanced Micro Devices, and Broadcom. Porsche plans to unveil the electric version of its Cayenne luxury sport vehicle in the U.S. at the end of this year. This curious timing. Porsche's move comes as the president threatens European car makers with import tariffs as high as 25%. They don't have any plans to make the cars in the U.S. because their volumes are just too small for that. According to The Independent, Disney reportedly scaling back the Hollywood premiere of its forthcoming live-action remake of Snow White. The film's been hit with controversy over its casting and the inclusion of I don't even know what to call them, the 7 vertically challenged individuals. I suppose I identify most with Sleepy.
Yep.
Maybe Dopey, too.
Oh, you have to keep that.
Well, that's kind of the premise. Whatever. Yes. Anyway.
I'm not even good.
Thank you for your
Don't even comment.
Thank you for your final broadcast, John Tucker. Paul, the thing, Snow White has been a train wreck. I mean, Variety's kept going talking about this movie.
I don't know. I mean, it's just, tried and true story. Bring it back every generation, but
this one is
one's different. But wait 5 minutes, and we'll see how the world changes.
We're going to calm down here. Futures up 41, and to calm us down from the quiet conservative firm Robinhood is Steph Guild, head of investment strategy. Fly in the wall at Robinhood. What's it been like the last couple weeks at a firm that's inventing a new kind of trading?
Yep.
It's well, like anything watching the economy or markets this year or the last couple of months, it's been interesting to say the least. I do think we've given our customer base they are smart, I will tell you, and we've given them a lot of different tools in their toolkit to manage through this period. We have been seeing, in terms of their in terms of their behavior, the buy the dip reaction function has definitely shifted. They are being very selective about their buy the dip. So they're still adding to their favorite positions, Nvidia, Tesla. And then they are, like I've never seen before, peanut buttering is what I'm calling it, sort of spreading around to different investments, particularly just across index funds, rather than kind of, making bets in other places. And then, they're using our high cash yield, Robinhood's high cash yield.
Are they going to cash?
We haven't seen a huge increase in cash, but they're not making the cash levels haven't really been changing. So you're seeing if they're putting money to work, then they're kind of equally adding money to cash.
Interesting. Are they just are they selling on the way down? Do they try to add on the way down? Because we don't feel the buy the dip move here.
That's what I mean. They've been doing it very selectively and then doing it across a broad range of index funds. Otherwise, they are not buying broadly across the day.
You mentioned peanut buttering. That's CFA level 3, isn't it?
It is.
Do they serve Uncrustables at Robinhood? I mean, Robinhood's a kind of hipster firm. Or do they have Uncrustables in the pantry?
No, I haven't seen them. We do have bread and peanut butter, though.
Okay, it's like healthy.
Protein. So how are you guys at Robinhood thinking about just the economic outlook here? Because that's kind of what people are trying to get a handle on, because that will inform where earnings might end up and so on and so forth. How are you guys, have you changed your view of this economy and this market over the last several weeks and months?
Yeah, I've been thinking about it for a couple of weeks. I'm going to put in a piece that we'll publish later today or tomorrow.
Nobody's listening, so go ahead, please.
I do something called Investors Guild. It's every week, and in it we were going to talk about the other things around the Treasury because there's the deficit debates coming and the budget debates, but I've lowered my GDP outlook. I had a pretty strong one because I did feel like there would be a lot of support for domestic businesses. So I lowered that from 3 to 2.5%. I could go a bit lower. I've lowered my earnings growth expectations, and I'm lowering my target on the S&P from 65 to 6,300 for now, which I just read Goldman did basically the same thing.
Okay. So, and when you step back and you take a look at the Robinhood, has their pace of trading intensified during these down drafts, or do they sit on the sidelines a little bit? Or I'm just trying to get a sense of, some days the volume out there in the marketplace is well above historical levels. Some days, even on big selling days, it's not heavy. So there's not panic out there in the street, but a lot of people are looking for a big downdraft on big volume to say, all right, this market's capitulated.
We haven't seen a huge. I mean, I'm watching the volumes, and I do see greater volumes on the buys than the sells still. But again, it's been really selective rather than buying everything. And on the sell side, I've seen some taking away, I think, from places that the customer base, and this is me speculating on it, just has lost conviction. And some of it is in the Mag 7. It's just not all the Mag 7.
I could go on and on. Steph Guild, come back quickly. We need you in the next couple of days after you publish, in the next week. Steph Guild, head of investment strategy at Robinhood. Too short a visit this morning. This is an important conversation right now. Leland Miller's been a little busy. He's with China Beige Book, and he has been advising on China economics to the Trump administration in a broad sense. He's not able to talk about those specifics, but we're thrilled he could be with us today. Leland, you are adult at guessing China GDP. Is it a legit 5%?
Absolutely not. But it doesn't matter. I mean, they come out with numbers and say it's, whatever numbers they have, and they say it's 5%. The market buys it. You get 2 op-eds from somebody saying we're skeptical. But each and every time the market basically buys whatever they put out, regardless of the evidence. So we're going to see more of that into the future.
Are we going to see more tit for tat within a zero-sum economics?
That we will definitely see. I mean, we're entering trade war time, obviously. There's tariffs coming from every direction. And I think it's important to to separate what's happening with China from what's happening with the rest of the world, because I think there's a different discussion around economic imbalances in China, which are not even the focus of the current tariffs. So, there's a Mexico-Canada strategy that they're working on. There's a broader world strategy in terms of restructuring economic relationships and figuring out lessening the trade surplus. And then there's China. And I think the China discussion is the one that we've yet to have. And it's going to go to several different directions, whether it's, Trump going to China at first, trying to get a trade deal, and then going another direction. We don't know yet, but that's the one that's to come.
Leland, how do you think China views a potential trade war with the U.S.? Do they feel like they have leverage here, a position of strength? How do you think they view it?
They definitely don't have a position of strength, but I think they're in better position than they were last time around. I think all the announcements that we've heard for the last 6-8 months from Beijing about bigger fiscal stimulus, more monetary firepower. There's a lot of people who've said, "Oh, look, big things are going to happen to the Chinese economy because of that." None of that has actually happened. If you look at this is all getting ready for a worst case scenario with Trump. And so they're ready to do bigger fiscal spending. They're ready to use the monetary spigots that they need to in a smaller way. We're not talking about the bazooka unless it's a break the glass emergency. And so they're getting ready. They haven't done much yet, but I think that they're prepared in a way they weren't last time if things get really bad.
Leland, I kind of look at some of these big Chinese technology stocks. I'll use Alibaba as an example, up 65% year to date. I use that as kind of a proxy for how Western investors look at China. Is there reason to be optimistic here about China, looking at a stock like Alibaba?
Well, I think you're right that's how a lot of people use it. That wouldn't be my lens. I think that you could have a couple of companies in the tech sector doing really well, the DeepSeeks, the Alibabas, the Tencents, whatever it might be. And those stocks are going up, and people are excited about AI proliferating around China. That has absolutely no correlation with broader stocks, and the broader stock market has no correlation whatsoever with the real economy. So you can see some companies doing better. I don't think that has anything to do with the Chinese economy writ large, even if investors want that to be a signal.
For you on your commute this morning across this nation, good morning, Canada as well. Leland Miller, China Beige Book, an extended conversation here, specifically trans-Pacific. On YouTube, good morning, good evening across the Pacific Rim. We're out at Bloomberg Podcast. Subscribe to Bloomberg Podcast. Leland Miller, educate us on the nonsense of bilateral art-make-a-deal negotiations. We are multilateral. I studied at the altar of William Klein at the Petersen Institute. Let's just take Vietnam. How does Vietnam fold into our nonsensical bilateral debates?
Well, I think by nonsensical, what you're referring to is the obsession by some over bilateral trade deficits. And the problem with that is you can have restrictions against one country, but what you're really worried about is what the grand totality of all the trade flows are. So if you have restrictions on China, and China's sending things to Vietnam, and Vietnam's sending to the United States, and it balances somehow, then that's much less of a worry than if you have a situation where you have a mounting trade surplus overall. So this is becoming very important because we're in an era of tariffs, we're in an era of transshipping around tariffs, we're in an issue in which the more we go at China, the more they're going to be setting up shop in third-party countries. So it's very important people understand that there shouldn't be too much of an obsession with bilateral trade flows. You can watch it, but it's the multilateral situation, it's the totality that's really important.
Leland, do you think President Xi would welcome a meeting with President Trump face-to-face to talk about broader trade issues, maybe just issues outside of economics? Is that something you think could happen in the next, 6 months or so?
Yeah, I know he'll welcome it because he's been sending signals to many of us in the business community here in the United States that they're all systems go. They want to talk. So yes, I think they want to talk very badly, but the preconditions on that will be you can't embarrass us, you can't surprise us. We need to know what's in store for the next 6 months so that President Xi doesn't walk into a trap. So there are preconditions on the meeting.
Leland Miller, I want to traipse delicately here, but I think it's an important conversation for this nation this morning. Trump 1 was a Lighthizer trade made out of the crucible of Robert Lighthizer brutal childhood in Eastern Ohio. He saw Eastern Ohio crushed. What is Trump 2 trade theory compared to what it was in Trump 1?
Well, I think Trump trade theory is very similar. I think Trump trade practice is diverging a little bit from the theory so far. Look, the first term, it's correct. It was very different in a lot of ways than this Trump second term, in that Trump was constantly looking for victories. You know, he renegotiated NAFTA, he renegotiated KORUS, he negotiated a trade deal with China. These were victories. He was using tariffs for the most part as negotiating leverage towards an outcome. The goal in the second term is very different, and markets have refused to believe this. They've maybe they do now with the market doing what it's doing, but the Trump administration and the president himself wants to restructure economic relationships in a lasting way. He wants to shift the whole paradigm, and so set up a wall around the United States, cut taxes for domestic manufacturers, and incentivize industries to come home. And so because of this, there is much more of an intention to go at all these different blocs and countries and go after trade surplus countries and try to right the economic relationship and bring some of these industries back home. So the idea is much bigger than Trump term 1. This is something they want to leave a legacy on in terms of just redefining the way America does business around the world.
And Leland, is there a valid concern that some in the marketplace are reflecting today in asset prices that policy that you just articulated may result in slower economic growth and certainly higher inflation?
This is something that we've spoken about a lot. People are usually binary on this. If you put tariffs in place, it's a disaster. If you put tariffs in place, it's fantastic, and usually on two extremes. Neither of those is right. You can have tariffs in certain circumstances in different regimes, but you have to sequence them right. So you have to make sure that you're not going. If you don't want prices to rise, you have to have substitutability. If you want things to be gradual and there not to be a market reaction, then you can't go at rival production centers and hike tariffs, at both of them at the same time. You need to have an out. I think what's worrying markets right now is if Trump is really trying to have a trade policy that changes all these economic relationships around the world, especially via tariffs, there needs to be a place where it's a foundational place to build. And that has traditionally been the USMCA countries. It hasn't just been the United States. Right. I think some of this antagonism with Mexico and Canada has gotten people worried that prices are going to rise because you can't just bring everything home to the United States.
On the leakage, I sound like Steve Roach a million years ago. The externalities and the leakage out of a constructed Trump system of trade, Leland Miller, isn't the singular leakage diminished economic growth that one day flips to a deflationary or at least disinflationary vector?
I don't think anything is baked in. I think all of it's about having a strategy and then sequencing it right. So, if you look at the EU, everyone's panicked about how we're going to go to war with the EU. If this is done in a very sensible way, and the end result of this is that Germany is pressured into releasing its fiscal brakes. The EU spending more, it's defending itself more, it's funding more innovation, it has a broader capital markets union. People are going to be looking back in a couple of years and saying this is a net win for the United States and a net win for Europe. Now that doesn't mean how it's going to be executed it is going to work that way, but in theory, there's no necessarily bad outcome here.
Leland, thank you. Let's do it tomorrow. Leland Miller, China Beige Book. Greatly appreciated this morning. This is the way surveillance rolls, folks. Moments ago, Freya Beamish, expert on China with T.S. Lombard London, publishes the balance of growth between the U.S. and China is now a critical trigger point for a paradigm shift. Rarely have I seen such forceful notes there from Freya Beamish. We'll get her on here soon here on it. That incredible conversation there about, again, the difference between theory and thinking about it versus the action, the headlines that we see on the Bloomberg.
Yeah, and Leland Miller has just always been, I think, one of the go-to people on all things China economics and China strategy. His data that they have there, the China Beige Book, is so unique. It's really independent data. It's boots on the ground data. So they tend to have a really good view of how the economy is performing there.
If you're just joining us across on the world, and of course on YouTube, Jennifer Dlouhy and Joe Doe, they have the headlines here. I'm sure Michael Barr will do this in a moment. Trump metal tariffs spark retaliation moves and calls for talks. The EU launching, quote, swift and proportionate countermeasures.
Yep.
That's like what the Bills and the Lions did, except they didn't have swift and proportionate countermeasures.
Yeah.
So their seasons ended early.
It seems like everybody, whether it's the EU, whether it's China, whether it's Canada, lesser extent Mexico, people are ready to go counterpunch immediately on these tariffs here. So again, a lot of questions centered around how long will these tariffs be in place.
What do the Stanley Cup finals look like when the audience balloons? You know, the excitement of it all. I mean, it's amazing. I don't. We'll have to see if there's Canadian teams in there because Montreal's not getting it done. Toronto's not getting it done. Rich, is there anybody from Canada scheduled for the Stanley Cups?
Efforting.
You know, I mean, Edmonton, are they in the game here?
I don't know.
You know, we don't know.
It's hockey.
Winnipeg Jets. Okay, we're very Winnipeg. Good morning to Winnipeg. We're on YouTube. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, the offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Stand by for inflation news in a few minutes with the CPI. Bloomberg Economics expects the report to reflect weakening consumer demand. The options markets expect the S&P 500 to swing 1.5% in either direction after the data. That's according to Piper Sandler. Ahead of the cash open, ahead of the data, Dow futures up 244, the S&P E-minis up 47, the NASDAQ futures up 196 points. Goldman Sachs strategists lowering their target for the S&P 500 year-end, lifting their view on European earnings, a further sign of growing skepticism on the outlook for the world's largest economy. And you have Intel shares jumping on a report that TSMC is pitching a foundry joint venture to them and others. And that is the most actively traded stock right now. Shares of Intel, they are higher. Remember, Amazon once planned to buy them for more than $1 billion. iRobot in the earnings raising substantial doubt about the ability to continue operating. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul Tom.
John Tucker, thanks so much. Mark Zandi joins us now into the CPI report and out of it. Mark, I got to get the CPI right now, but Zandi has been on fire out on Twitter writing this up. And, he's got the fam photo on Twitter. And you can tell, I mean, your youngest daughter, Mark Zandi, Daffodil, your youngest daughter, just look, what is it about the youngest daughter, Dr. Zandi? They're trouble.
Yeah, I hear you. But all my kids are enchanting, Tom. But you're right.
They're enchanting. And then there's Daffodil, the youngest daughter. How's the inflation at the Zandi house right now? Into this report, what do you see viscerally on inflation?
Abstracting from the ups and downs and all around, it feels like consumer price inflation is 3% year over year, which is, it's back closer to the Fed's target, but not quite there. I mean, on the CPI, the Fed's target would be 2.5%. The thing that, obviously is a bit more worrisome is where we're headed. And, if we had this conversation 3 months ago, I said we'd be back to the Fed's target by the spring. But, with these tariffs, it doesn't feel likely at this point.
So, Mark, is that a valid concern for this marketplace that these tariffs will result in, meaningfully higher inflation?
Yeah, obviously it depends on how high the tariffs go, how broad-based they are, how persistent the tariffs are put in place. But feels like we're going to get some real tariffs here for an extended period. Here's a good rule of thumb. For every percentage point increase in the effective tariff rate, that adds 0.1% to consumer price inflation over the subsequent year. So we go from 3% effective tariff rate where we were before, President Trump, to let's say 10%, and that feels like where we're headed. That adds 0.7% to CPI inflation in the coming year. That's meaningful.
Can you calculate where we are in that 3% statistic now? Are we at a Zandi 4.2% this morning, or on our way to 10%? Do we know where we are?
You mean, Tom, with what's already been implemented?
Yeah, what's already been implemented. The Zandi meter.
I think we're kind of closer to 4.5. You're right. 4 point. I have to do the calculation, but 4.2 sounds about right to me. Yeah. So we've gone from 3 to 4.2. Yep. So we got a ways to go here. But, the real thing is the reciprocal tariffs, right? If that's actually implemented early April, that's kind of the schedule at the moment.
Yep.
That would get you over 10. That would get you over 10 on the effective rate.
And what would such an environment do to your GDP outlook?
Weaker. Tariffs they result in some combination of higher inflation, higher interest rates, or weaker economic growth. Pick your poison. It's, if you don't get the inflation, you're going to get the weaker growth. If you don't get the weaker growth, you get the inflation or higher interest rates. And all the above is already happening in anticipation of the tariffs, right? I mean, you can see inflation expectations are up. The Fed's not moving now, and they're telling us it's because it's economic policy code word or tariffs, and growth is slowing. So all the things that we think tariffs are going to do, they're doing in advance of actually the tariffs coming into place because we're all anticipating it.
But Paul, to your good question here, I'm sorry, it comes down to granularity. Daffodil needs a new pair of Doc Marten Mary Janes at the Zandi household.
I don't even know what that is. That sounds scary.
They're leopard. I mean, they're leopard, and they're incoming, and they're going to have a tariff on them because they're made in England.
Sure, everything.
I mean, everything micro granular is going to be there. Mark Zandi with Moody's with us. We're going to talk to him after this inflation report. There's a lift to the market today. Paul, am I right? It's a tentative lift?
We were here, same place yesterday, Tom, before we got some of the tweets started coming out.
We'll have to see. I'm looking at the Sweeney yield important 3.98% up a good 4 basis points. Use that as a benchmark here. On this important inflation report, as John Tucker said, it comes in a little bit. Here's the report, John Tucker.
This is breaking news from Bloomberg.
And the trajectory of inflation a little better. CPI month over month coming up 0.2%. We're expecting a rise of 0.3%, and that's down from the prior month of 0.5%. When you strip out food and energy, core up 0.2%. Again, coming in lighter than expected. Average hourly earnings right now we are up 1.2%. That is the reading there. So a little lighter than expected in the inflation report today. And we check the markets for you all day long right here on Bloomberg Radio. The 2-year yield, that was up 3 basis points, now down 3 basis points. The 10-year, the benchmark, that was up 3 basis points before this report. It is now down 3 basis points. Dow futures getting a pop, up 500 points. S&P futures up 85 points. The NASDAQ futures also getting a pop there, up 357 points. There you go.
Very good. Thank you so much. Sweeney was day trading that at Robinhood there on the 2-year yield. Our economic indicators with John Tucker, always brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Mark Zandi of Moody's with us this morning.
So, Mark, just that inflation reading, the CPI we got, as John Tucker's just reporting, a little bit better than expected in terms of lower inflation. We know it's backward looking, but what do you take away from the CPI print today?
Well, that's on the face of it better. You know, it's one of these things where you have to go to the second and third significant digit. I mean, I think our estimate was like 0.25, so it would have rounded up to 0.3. So maybe, I don't know, we'll have to do the calculation, but, you know, that's how much we're parsing the numbers here. But I think bottom line, you know, abstracting from the vagaries of the monthly data, we're kind of, as I said earlier, still stuck around 3%. And that's where we're going to stay for a while until we get some clarity around. And hopefully these tariffs go away, you know, sooner rather than later.
Mark, where are you on a Fed rate cuts through the year? I mean, everybody seems to be three-ish guessing, but you don't guess, Mark. So, you know, what's your feeling and what they'll do?
I tell you, Tom, I'm confused. I mean, and so's the Fed, right? Because what do you do with the tariffs? I mean, it raises inflation, it weakens growth. So how do you respond? And they're saying, well, we don't until we get some clarity, any kind of clarity around what's going on and how it's all going to play out. I mean, in my baseline kind of official forecast, I have 2 rate cuts towards the end of the year. It's going to take, you know, until the second half of the year before they get enough clarity to start moving again. Right. But ultimately, you know, I do think the tariffs are going to be, you know, more growth negative than inflation positive, I think, at the end of the day.
Dr. Zandi.
And that may mean more rate cuts.
Dr. Zandi, thank you so much for joining us today. Mark Zandi, writing for Moody's, always very strong out on Twitter. Look from there for some very important notes. Futures up 74, a lift to the market. Not going to make too much about it. Paul and I are waiting for the next headline. Long ago and far away, a wonderful person who was a great supporter of mine in the early years, that's Stan Freberg, was Fred Bergsten. And he was at the Petersen, what became the Petersen Institute. The toughest job was to pick up from Fred, and that is what Adam Posen has done with grace, to say the least. The only one working harder than Adam Posen at the Petersen Institute is Chad Bohn, who hasn't had a day off since time began, as we look at this trade mess we're in. Bonus round, Adam Posen is expert on the German political economic experiment. Dr. Posen, thank you so much for joining us today. If Doug Irwin up at Dartmouth was to rewrite his history of the tariffs and all, what would Doug Irwin, what would Adam Posen be writing right now?
Thanks, Tom, for having me back. And everyone should read Chad Bohn and Doug Irwin's new piece in Foreign Affairs that just came out on tariffs. Doug has made the point repeatedly, there are charts on the IPIE website, that this is historically unprecedented. You really have to go back 100 years, 90 plus years to Smoot-Hawley to see anything like this in terms of the size, scope of tariffs. But even more so, this is much more uncertain, as he's pointed out, Chad, Mary Lovely, and I, in various ways. This is an exercise of discretionary presidential power. I'll leave aside the constitutionality or the issues of politics, but just from an economic point of view, in the past, when there have been large moves of tariffs, it's mostly been in the US because Congress has authorized them. This is being done day to day, or as Justin Wolfers joked, intraday tariff changes on presidential whim. And that creates even more uncertainty. So Doug would say we're in new territory and it ain't pretty.
Professor Irwin joining us from Dartmouth. We'll do that on Friday here on Bloomberg Surveillance. Dr. Posen, as simple as I can, Krugman, with his Nobel speech, would look at the microeconomics of the moment, and there'd be a lot of fancy Adam Posen talk. Forget about it. What's the deadweight loss for our audience right now, our audience in Winnipeg, our audience in Wisconsin? What's the deadweight loss given all of this?
On the order of $1,000+ a year for the average household, higher for lower income households. And that doesn't include the hits to retirement funds or the going forward, the lower opportunities because investments getting chilled. Direct hit is on the order of $1,000 per household. You could argue if the tariffs stick or if they put on the across-the-board tariffs, it gets closer to $1,500 to $2,000 a household.
Adam, I'm hearing the recession word more and more over the last several weeks. Is that in your calculus anywhere?
So I've been saying for a while now that I was expecting a large boom and then Fed-induced bust under Trump, but I always held out that this was a radical enough program that it was bimodal, meaning, again, simple talk. It wasn't going to end up in the middle. It was going to be one of two outcomes. I had the recession probability only at like 15+%, so no different than anybody in a normal time. But what I kept saying, and this may have been a hedge, but it turns out to be reality, was if Trump administration overdid it on tariffs, on migration, on fiscal follies, that would swap us into the into the recession camp. So I've upped my recession subjective probability to 30%. I still think it's more likely than not we get a boom bust, but you throw in the geopolitical shock, which is enormous and which really changes the game for Europe and for everybody. And then you throw in the fact that DOGE shutting down Department of Education, USAID, I may not like, but I expected that. Throwing a miasma of similar uncertainty over all government contracting, all government workforce has huge effects. So yeah, the recession risk has gone way up.
From some of President Trump's policy people, we're starting to hear more and more discussion that what the president is aiming to do is to kind of reshape the U.S. economy to bring more manufacturing back to the U.S. And some folks are concerned that that's kind of counterintuitive to what we've experienced over the last 50, 60, 70 years of more of a globalization and at least in the U.S. economy, a focus on the services part of the economy. How do you view this potential policy shift for the U.S.?
I view it as a very mistaken policy shift for two reasons. First, in line with what you said, increasing manufacturing employment or literal production within U.S. borders isn't necessarily a good thing. If they want to force Americans to do rare earths mining or production of generic pharmaceuticals, those are steps backward for U.S. workers. And so you would either have to vastly overpay, which then makes it totally uncompetitive internationally and totally an inflation for the domestic households, or you're just subjecting American workers to bad jobs that we're too well endowed and skilled to do. The second reason, though, is it's just not going to work. My colleague Robert Lawrence, who's at Harvard and Petersen Institute, had a book out last fall called Behind the Curve, which I think established brilliantly that even if you fantasize about going back to 1958 and a bunch of guys getting to be big breadwinners for their families with no education, which there's reasons you might like that, it's just not going to happen because the total taste of the world and the movement of technology for globalization has made it impossible to create large numbers of manufacturing jobs of that sort. So it's a bad goal and it's not going to work.
Well, we continue with Adam Posen, the Petersen Institute. Again, Doug Irwin with us on Friday from Dartmouth. Brij Khurana coming up as well from Wellington. Good morning across the nation. Good morning, 92.9 FM in Boston and on down to 99.1 FM in Washington, D.C. as well. Adam, we got a good amount of time here, but I want to slip this in. I think it's so important. Robert Zoellick is somebody that I think more than anyone takes our international economics and our sense of constructive globalization and folds it into American business. He's been on fire recently. What's the message you've taken from one of our trade giants?
I agree. Bob Zoellick is a hero to me and is a statesperson of the longtime ideal for the U.S. And he integrates diplomacy, history, security, and economics like nobody else, pretty much.
Okay, here's the sentence, Adam. Here's the sentence. Yeah. The zero-sum logic reverts back to a view in the 19th and 18th centuries called mercantilism. That's from Zoellick. Is that where we are this morning?
Yeah, that is where we are. I mean, when you listen to the president, President Trump, give the rant he gave yesterday about Canada was very unfair, EU is terribly unfair, on and on and on. Again, I don't presume to talk psychology, but as a matter of economic facts, it's just a completely self-deluded view. It's not true on the facts. But it only makes sense if you have the mercantilist blinders on, which means you see trade as negative sum, not even zero sum. And you see, again, going back to the previous comment, that only making physical stuff matters. And this is just not true. You can make national security arguments, and Bob would allow for this too, that specifically with respect to China or in a given industry like semiconductors, you don't want to have too much concentration risk, dependence on a particular thing.
Right.
Even there, though, you don't want to be putting up barriers around so you're dependent on some American company that happens to be a friend of the president's and is overly protected, too big to fail, and makes planes that drop out of the sky or semiconductors that don't really work, right? So, this is a huge step backward. Where I think Bob is much more articulate than I'm being is the international systemic part of this.
Right.
That there is a feedback loop for the U.S., and this is what I think Trump and Bissett and Hassett, whether they know it or not, whether they think it's a means to an end or not, I don't know, but they're ignoring that the U.S., as I argued in Foreign Affairs a few years ago, was chairman of the club and therefore got to set the rules, got to self-deal, got to determine who was members, but it had to behave within some reasonable set of rules and provide the club some benefits. And once the U.S. just says, I'm a member, and a member may even leave the club goes on without you.
YouTube live chat. Thank you out on YouTube. Huge audience this morning. Paul Sweeney. Tom, you need a beard like Adam Posen.
Oh, there you go.
I mean, there it is. Adam's not shaving until the Red Sox are in first place. We'll see when that happens. Continue, Paul.
Sustainably in first place.
Sustainably in first place. Hey, Adam, I think most Americans would agree that this U.S. government, federal government, is bloated. It's bureaucratic, too much red tape, all that good stuff. Is DOGE the way to address that?
Not so far. I mean, Paul, you're right. Most Americans would agree, and there's certainly a point there. I think what I tried to say to people before DOGE got started was the issue with government isn't so much waste fraud. It's that because of politics, every task has 17 key performance indicators, has 17 different constituencies, and then gets funded to 75, 80% of what it needs to do that at best. And so what you needed to do, and this is the place where I think an outside government reform effort could have been good, is saying, let's prioritize, let's not let the accumulation through the years of individual little congressional or special interest moves determine our budget, determine our priorities. So again, I'm not in favor of getting rid of education. I'm totally against getting rid of USAID, but in a sense, as a process, if they had just come in and said, we're taking out this whole department and we're doing this instead, that's okay as a process. It's not okay to create terror across the workforce. It's not okay to make government contractors not get paid for stuff they've already done and not know what they're going to get. It's not okay to blow up whole ecosystems just because they're in government. And most of all, if you did it by priorities, things like energy grid, nuclear power experts, air traffic control, NOAA and NIH directly into world R&D, those things would have been spared because they're directly helpful to the economy.
Adam, I got to do an audible here before we let you go. And, we all know in academics that you are expert on Germany. Let's go back to June of 1963 when time stopped. President Obama redux JFK's unbelievable speech in the heart of the Cold War. Mike, ready for my German, Paul? Ich bin ein Berliner. I nailed it. Okay, not even close. I got a D- there, but the professor got hockey tickets, so it worked out. Adam Posen, you are expert on this. Is this a Germany, in this new Germany? Would Konrad Adenauer and Willy Brandt, would they recognize it?
They'd have trouble, and that's a good thing. They would have trouble imagining a Germany that pursues security without being totally reliant on the US. They would have trouble imagining a Germany that does use its fiscal capabilities more than not. And they would have trouble with a Germany that explicitly is going to rearm. But I think it's the right move for Germany. I mean, you've seen the meme on Twitter, Tom, that Chancellor Merz, incoming Chancellor Merz, is shown with the big smile on his face, and the blurb is, when you realize you can borrow just like any other European country. This is genuine progress. It's sad that it took the threat to NATO and the threat from Russia and the US to make it happen. But I think this is a genuine leap forward, as opposed to previous Chancellor Scholz's Zeitenwende, changing time. This is the real one.
Adam,
right now.
Generous conversation. Thank you so much. Folks, look to Chad Bone and the rest at Petersen Institute for terrific, thought-provoking essays in the chaos of where we are now. Futures up 57, up off the inflation report, but then have pulled back, up 57 right now on futures. Bloomberg surveillance this morning, we're brought to you by IBKR. Will the year-over-year change in U.S. PPI, will it exceed 3% this February of 2025? At IBKR forecast trader that yes, it was recently at 39%. What's your take? Trade your prediction at ibkr.com/forecast. As we've been saying for days, if not weeks, in this chaos, the bond market matters, Paul,
sure
to
does.
the stock market. It's that simple.
Yep, we got a pro in here joining us today, Brij Khurana. He's Senior Managing Director and Fixed Income Portfolio Manager at Wellington Asset Management. Joining us here in our Bloomberg Interactive Broker Studio. Brij, talk to us about, first of all, what did you think of the CPI print? It came in a little bit lower than expected. What are you seeing in the bond market?
Yeah, so I just going through my notes right now. It was universally positive, I would say. So two things that were concerning last time. Core CPI, if you take out shelter, was almost 0.5% month over month, which was the highest it was in 2 years.
Okay.
That fell back down to 0.2%, so that's good. And then core services, which was what the Fed really cares about because that is tied to the labor market, that was 0.5% as well last month, month over month print. That came down to 0.3% month over month. And that was driven largely by transports and airlines. But point being that I think this is a welcome sigh of relief for the Fed after that very spicy print. I can see why the stock market likes it, because I did think this was coming into this event. This was going to be one of the most impactful CPI prints in the last few years, just because of the equity volatility we've seen. And, you know, the market has been somewhat buoyed by the fact that the market's now pricing in almost 3 cuts for the Fed throughout the rest of the year. And so in my mind, it was a very important print. And you know, I'm not surprised stocks like it.
That was brilliant, except Wednesdays were note-free at Bloomberg Surveillance. Nobody, Monday and
I'll put
Tuesday.
it down then. Yeah.
Monday and Tuesday, we got notes. Put the damn notes aside, Paul.
So what have you been seeing in the bond market over the last several weeks of all this volatility, all the increased trade talk, the uncertainty to economic growth, the uncertainty as it relates to potential impacts on inflation? What's the bond market been saying?
So you have definitely seen a decline in yields in the U.S. In particular. Actually, it's been much higher yields abroad.
Yeah.
You know, I think the U.S. bond market is really responding to the uncertainty in the economy, the sudden stop you might see from whether or not it's tariff policy, but also immigration as well. And, you know, but I think what's interesting to me is that I look at the intra-sector performance between cyclical stocks and defensive stocks. To me, it's been one of the best leading indicators for bond yields. You know, as the market's worried about the cyclical companies, then bond yields generally fall. And, you know, what's been interesting is those stocks have been almost 35% off their peaks, cyclicals relative to defensives. And bond yields are still, you know, about 40, 50 basis points above where we were in August. And so it has been a notable decline in bond yields. I guess just given the uncertainty in the economic outlook, I would have thought it would have been more, and particularly at the back end of the curve. Most of the move has been really repricing the Fed, which, to be honest, you know, this is welcome news. And the market's pricing in 3 cuts roughly. I think that's pretty fair, but you know, I'm not sure that there's going to be a lot more than that.
From December 22, off the Bloomberg Fixed Income Corporate Total Return Index, what a recovery in price we have. I don't think it's nearly out there in the zeitgeist now at all, that it's been price up, yield down for bonds. But we're not back to the price peaks that we saw pre-COVID. And we're certainly not back to the great moderation vector of success that bonds lived. Do you visualize out there just getting back to the peak of price that we had years ago? Or can, heaven forbid, get back to the Wellington, PIMCO vector that we saw in the Great Moderation? Can we see that much appreciation?
I would say this. It's been a really tough, returns for bonds over the last, decade now. I think it's the worst performance for bonds over, a few decades, and on a real basis.
Thank you for saying that. Nobody else will say that. I appreciate that.
Yeah, on a real basis too, and on an inflation-adjusted basis, it's you're back to the mid 2000s in terms of total returns for bonds. Now, what I think is different right now is that we are in an environment where we've had so much fiscal stimulus since the pandemic. We got to all-time low bond yields, and now we've had running deficits of 6 to 7%. And so the economy hasn't been very responsive to high interest rates because fiscal stimulus has been uncorrelated with the other parts of the economy. And so I guess the point I would make is we do seem to be moving into an environment where fiscal stimulus is not going to be what it was in the last few years. And then you really bring up the question of whether or not, are real policy rates or are real rates that different than they were, before the pandemic? And I would argue we're seeing less labor force growth. We're seeing, similar productivity growth than we saw pre-pandemic. That means that the neutral rate for bonds is not that much higher than we really saw prior to the pandemic, even if we're in a higher inflation regime.
Did you take notes on that, even though Wednesday's note-free?
Note-free.
I forgot to take notes.
There was no notes involved in that one.
Brij, how much credit risk are you guys taking these days in your portfolio, and has that changed over the last several weeks and months?
Well, since I've come on your show last time, I think this is the first time that actually spreads are higher.
Okay.
I still think, but they were coming off a very, very low level. So high yield spreads are currently around 310 basis points. I think that's getting to be much more fair levels than we've seen. But once again, as I said, I think the market's been really focused. One of the reasons credit spreads have been so tight has been just this amount of fiscal stimulus. And I also think, you were talking about trade earlier. I do think there's this unappreciated aspect to trade, and how much surpluses have been from abroad have really come into U.S. assets, both in U.S. equity markets and U.S. credit markets. And so, if we're really trying to change that paradigm of lower trade deficits globally, that should mean higher risk premium when it comes to credit markets and lower equity valuations as well, which is what we've started to see, at least in the last month or so.
First, thank you so. Excuse me, I did not have the Detroit Lions blue button on. I'm new. Brij Khurana with us with Wellington. Thank you for that fixed income discussion.
Appreciate
That's really good about the 10-year struggle that fixed income has had. Futures, futures up 63 right now. Dow futures up 307. There's a little bit of a lift to the market, but you got that whole, headline thing out there right now. We're going to dive in here with a little economic Fed analysis, but nobody really cares about it because all they care about, and this is national last night, down to Florida and up to Boston, the Bruins gave it to the better team, the Florida Panthers last night, motivated, and Brad Marchand, the giant of Boston, he's been emotional about the exit to the Florida Panthers. You are our surveillance reporter last night. Mike McKee joins us here on Panthers Bruins. What'd you witness?
Well, hard to believe that Brad Marchand would be upset after 18 years of playing for the Bruins, but he didn't play last night, so he's still on the injury.
But at least he was visible. There was, as you should expect, there was no attitude.
Skate. Yeah. Well, I mean, he's got to earn a paycheck. But it's good to beat the Panthers, but it still doesn't put them in the playoffs. And this is now we get to all the fans are trying to make up their mind now. Do we start a fire Don Sweeney chant or not?
Listen to you. Is there a fire Jerome Powell chant? There's been a few distractions, Mike McKee. How's the Fed chairman doing?
I think he's doing fine. Wall Street gives him a lot of credit, and at this point, we're not hearing about the Fed from the president. So we seem to be in an okay state. I wondered if he would actually try to fire Jay Powell immediately, given that he's so busy destroying the rest of the government. and Powell's term is not up till May of next year. That's not very long. So, he might as well let kind of Powell stay. And if the Fed were going to do anything, it would be cut rates between now and the end of the year, which is what the president wants anyway.
This CPI print, a little bit better than expected, Michael, but it does not, just to be clear, really reflect any of the tariffy type risks.
No, I was looking through to see if there were some signs that demand was up for certain goods because of potential tariffs, and that would push prices up, but it doesn't look like it. One of the things I was looking at was toys, because we get almost all our toys from China, and China tariffs were the ones that went through.
Yep.
And toys were basically unchanged on the month. So tomorrow will be more interesting. It's been a long time since we've said that PPI might be more interesting than CPI, but we'll maybe see some impacts in terms of prices for steel and aluminum.
Translate for Mike McKee now, tit for tat. What does that phrase mean in terms of the back and forth? I mean, the first thing I did, I came in to see if there was a tariff on vermouth.
Right, exactly.
Important stuff. But what does tit for tat mean to Michael McKee right now?
Yeah, we got to keep an eye on those liquor prices because the Canadians are already after that.
They go after Dolan vermouth. It's war.
You've got the half of the equation that the administration doesn't talk about is that the people who are running the governments in other countries that we are tariffing are politicians too, who also have to answer to their constituencies. And so they're not just going to sit there and take it from the U.S. They have to respond somehow. So the difference is that Donald Trump is basically talking about blanket tariffs. That's what the steel and aluminum ones are, of 25% on those goods from anywhere. Whereas the affected countries are trying to target individual goods in the U.S. to try to bring some pain to specific industries. And if you do the map, specific industries represented by Republicans, who they hope will then call the president and say, you're killing me here. You got to take these tariffs off.
So timing, just real quick, Michael, when do you think we will see that in inflation data, if at all?
You may start to see it in April when we get the March numbers for CPI and PPI, but it'll take a little bit longer than that for it to really get in there. But the thing to keep in mind as well is that when you raise tariffs, you also are making the opportunity for the domestic producers to raise prices. That's the whole point. And so we're going to see a price increase in a lot of different areas that get tariffed. And it just it's just going to depend on how long it takes companies to actually move their stickers.
The division in the studio right now is John Tucker and I have no life, folks, just so you understand. Sweeney and McKee are rocking it every weekend. Were you at Fenway Park in August of 2014 for Tom Petty? You'd be the one guy I know.
I was not.
You were not there. I would just assume McKee would have.
Of my 38 Bruce Springsteen shows, my favorite one was at Fenway.
At Fenway.
Fenway, awesome. Just
absolutely
fantastic.
Folks, out on YouTube, Tom Petty at Fenway Park. It is beautifully filmed. From New York City for 92.9 Boston and across this nation, Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, John Tucker, somewhat in for Lisa Mateo. He's doing a great job. I mean, he should be here tomorrow. He killed it on the CPI report.
Reliable.
Market lifts up 30, now up 63, up a little more off the 8:30 report, but nevertheless a lift. The VIX comes in 1.5 points, 25.39. A better tape, but Paul, to me, I'm looking at the red blinky green and the launch pad on Bloomberg, and it's like waiting for the next headline to drop.
You said it yesterday, Tom. You said it several times yesterday. The market was looking good, but waiting for the next tweet or headline to come out. And boy, it did feel like 10:05 yesterday.
It was
so
10:05.
we'll see how it goes today.
And we'll see. And has to do with, exhausted people. They're running 24/7 at every single political establishment in Ottawa. Should we do a road trip to Ottawa?
I'd love to do a road trip to Ottawa.
I think it would be, get up to Canada and see how they're struggling within this trade war that we're in. We hope all of you are well across the nations, around the world, and on YouTube as well. Subscribe to Bloomberg Podcasts. Bloomberg Surveillance this morning, this hour. We're brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Paul Sweeney, simple as I can. Most intelligent comment today was one S. Bassick, where she said, watch private equity.
Yep.
I think she's dead on.
Yep, absolutely. I mean, and again, they've got a lot of things that they would like to get monetized, either through an IPO or sale. And they thought they were going to do that in the beginning of the year. They said, oh boy, big M&A market, big IPO market. A couple of weeks later, not so much.
We'll have to see again. Futures up 65. From the Interactive Broker Studios, our Bloomberg Business Flash, John Tucker.
All right, S&P futures jumping after all measures of inflation came in lower than expected. Consumer prices rising just 0.2%. February, economists were looking for 0.3. That pushes back on the stagflation narrative. That's been gaining traction since the tariffs hit. Yield space, kind of interesting. The 2-year up 5 basis points, 399. The 10-year, 4 basis points higher. It was at 432. The Dow futures up 299. S&P E-mini futures up 65. That's a rise of 1.2%. The NASDAQ futures right now up 315. That is up 1.6%. The 25% tariffs on steel and aluminum imports coming into force today. European Union launching countermeasures, according to Reuters. Canada announcing $29.8 billion in retaliatory tariffs. Groupon shares, they are getting a lift. The online coupon company delivering a revenue forecast that beat the average analyst estimate. Intel, among the most actively traded, up 7%. Reuters reporting TMC has pitching in NVIDIA, Advanced Micro Devices, and Broadcom about taking stakes in a joint venture that would operate the chip makers' factories. And Mike Matthews, I don't think you've ever heard of this guy. He founded New York's Electro-Harmonix back in 1968. EHX makes equipment that alters the sound from electric guitars. It's a fuzz pedal. With tariffs on his suppliers, he's now deciding whether to absorb the cost or raise prices. He's not sure that he can make a profit. He tells Bloomberg he's in the process of trying to sell the company. Right across the river here in Long Island City.
You know my relationship with them?
I do not.
Okay, this is Electro-Harmonix. Think Jimi Hendrix, folks. the guy running it, who you just mentioned,
Mike Matthews.
Mike Matthews is a giant in music. Everything you hear on guitars, he started. He was the one who said, I'm going to make a little box and it's going to be a germanium fuzz pedal for Jimi Hendrix. I mean, essentially, that's where it starts. And they've been doing it, and we thank everybody at Electro-Harmonix for listening every morning. They listen to us like in their offices. It's sick. I mean, they need to get a life.
Well, Mike's thinking about going to Florida now. I mean, he's like in his 80s, so.
No, he's very elderly, and he's very vital and all that. But we say good morning to Electro-Harmonix. Out there, they have a compressor. They got a 4-knob compressor to die for.
Absolutely.
It's like, I mean, David Sowerby's going, what in God's name are they talking about? But thank you so much, John Tucker, for bringing up Electro. I got to go out and buy a pedal.
Their website, Effecting Music since 1968.
I'm going, Sowerby, David, stay with me here. I'm going down to 30th Street Guitar today. Only in New York is 30th Street Guitar on 27th Street.
Right.
Figure that out. And I'm going to get an Electro-Harmonix pedal. John Tucker, thank you for a little bit of Long Island and Queens and Brooklyn there as well. David Sowerby front-running Bloomberg Surveillance this morning with Ancora Advisors. And David, you do the math. The average stock from its peak down 20%. David Sowerby, are we in a bear market?
We're in a correction. Certainly, the market's down 10%. I like to look at the average or median. Now it's coming close to a bear market. And if we throw in small and mid caps, the average stock is about 25% off its own 52-week high. And if you look at investor sentiment, it probably puts us pretty close to a correction/bear market.
So, David, what are you telling your clients these days? Try to find the names you like, because now you can get them at a lower price, or are we just kind of sitting on the sidelines here a little bit?
Paul, maybe this isn't the best CFA term, but you grind through it.
Yep.
The average intra-year market sell-off for the last 75 years is about 14%. So we're right there, or close enough. Now, from a contrarian perspective, you can't call a market bottom, but when sentiment gets unduly bearish, and it's there now, if you look 12 months out, 11 out of the last 12 times it's gotten this bearish, the market's higher, and the average return over the next 12 months is 20%. I don't know if it's going to be 20%, but I like those odds, knowing I make my most money when I run against the herd and I'm a contrarian, which is more what you need to be today.
What types of securities would you maybe dip your toe into and start looking at this stage?
It's always got to start with free cash flow on a valuation basis, free cash flow margin, who's growing the dividend, 10% or better. If you look at the filings for the mutual fund I manage, a travel name, Wyndham, is off 20% from its 52-week highs. And we're not talking about $500 a night midtown prices. We're talking about La Quintas at $100 a night. It favors the middle market traveler. Wyndham has a very strong balance sheet, good recent earnings numbers. There's a travel stock that's down 20% from its 52-week high. I think that's an example. But if you find the companies that are generating good free cash flow margin above 12%, that's a good starting point.
David, we got some interesting and maybe troubling earnings news yesterday from a couple of industries. One, the airline industry, companies across the board cutting their forward outlook. We had a broad-based retailer like Kohl's do the same. What's your view? That kind of reflects that maybe the consumer is weakening a little bit due to some of the recent uncertainties out there. How do you view the consumer?
Paul, I think the adage in my career as an investor is never underestimate the health of the U.S. consumer, that they defy gravity. And if you look at household balance sheets, what the average mortgage rate is at around 4%, consumer free cash flow after they pay their bills, I think it's still a better than average time to be a consumer. What they don't like, what businesses don't like as well, is uncertainty.
Yep.
And that's an overused term in the last 2 weeks. But I was at an investment conference last week. 500 companies presented. The ones I sat in on, everybody got asked the tariff question. 8 out of 10 said it leads to uncertainty, and it's probably a hit directly or indirectly on earnings.
Yep. David Sowerby with us this morning with Ancora. We continue right now with him. A good conversation here. And as you mentioned, the Wyndham WH down the cap. We're not going to do Apple with David Sowerby. David, you have a vista like no one we speak to into Michigan and over to Windsor, Ontario, up into Ontario, and then down the Mississippi River, down into Kentucky, down the interstates as well. Translate the angst you see on our auto tariff war.
The auto companies have been very specific to the administration that this is a bad policy, a hit, violates the free trade agreement, whether it's NAFTA, U.S., Mexico, Canada free trade agreement. It violates long-term strategies for supply chains. The car companies are in much better shape today, Tom, because they're better capital allocators, better generators of free cash. We're not helping them by instituting tariffs, and what it ultimately gets passed through to the consumer and the number of weeks you'll have to devote income to pay for a new car. It's not good for the manufacturing renaissance that's been taking place in my home state of Michigan for several years.
Being in Michigan, David, give us a sense of just kind of what the folks up in that part of the country, how they're feeling about the trade I guess we have to call it a war skirmish between the U.S. and Canada. You guys are right geographically on the front lines there.
I may be the only guest in Bloomberg who can go south to Canada,
There you
Windsor.
go.
Now, no surprise, Michigan is the largest trading state with Canada, particularly Ontario. We're building this spectacular Gordie Howe Bridge from Detroit to Windsor. We'll have fewer passengers and freight hauling if we make these tariffs more permanent. It's just simply bad Econ 101. I wish the president would channel more Ronald Reagan or Bill Clinton, and unfortunately not channel his Herbert Hoover when it comes to trade.
David, give me an auto company or a manufacturing company down south of Detroit that you think has been pretty beat up right now. You mentioned Wyndham. Okay, it's hotels, great. But, I'm thinking Borg-Warner, except Borg-Warner hasn't done anything for a decade. Give me an auto company that's Sowerby ready that's been beat to death.
I think, though I don't own it, I think GM is interesting. GM had a very good investor day not too long ago where they talked about capital allocation, less CapEx on EVs, more growth, returning it to the shareholder, better free cash flow for GM. I know it's the biggest name of the group, but I think GM is doing some very good things from a capital allocation standpoint.
Okay, that's great, and I get it. From COVID, they're doing double-digit return. They're up 19% off the mat of COVID, but the 10-year track record's single-digit. Do you see a new capital discipline there, where we can look for nominal GD plus X beeps out of auto in Canada and America?
You can if you adopt the right policy, and I think the car companies are much better at spending their free cash than they were when they were making silly acquisitions decades ago, and now, more importantly, returning cash to the shareholder either with buybacks or dividend growth, where maybe too much CapEx was thrown into autonomous vehicles and electric vehicles, which consumers are reluctant to buy.
Tom, we're getting close to opening day, which means we have to ask David Sowerby about the Atlanta Braves and investing in the Atlanta Braves, Tom. David, what do you think?
Well, it's a name I gave you a couple weeks ago. We still own it. It's the John Malone spin out, like so many successful John Malone spin outs. He's been buying the stock. It's not just the team, it's the franchise, it's the stadium, it's mixed use retail, it's a small cap underfollowed stock. And I've always thought that you make your best money in underfollowed spin out small and mid cap stocks.
David Sowerby, thank you so much for the Ancora. Appreciate the note, particularly earlier this morning, that we saw from David Sowerby on the average S&P from its individual peak is down 20% as well. We need to do a data check. We've really slipped on that today with all these great conversations. Futures up 57, up 1%. NASDAQ up 1.4%. VIX comes in sprightly from a 28 level into 25.51 right now. The yield space reverses. We are in on yield with that benign inflation report. We are 4 basis points in the 2-year yield, 3.99. Well, 4% yield there,
I know.
Think what that does to the mortgage rate. West, that's a joke, folks. West Texas Intermediate, 67. Brent crude now over 70. $70 a barrel. Gold doesn't play this morning. And finally, we've got some dollar strength as well. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. House Republicans have approved a stopgap spending bill to avert a government shutdown at the end of the week. Now it's on to the Senate as we hear from Bloomberg Government's Jack Fitzpatrick.
The Senate is a heavier lift. They need 60 votes at least to end the filibuster. We've only heard from one Democrat who says he's going to support it. That's John Fetterman from Pennsylvania. A lot of them have said they aren't decided, though. So it is possible that they can get this through.
Bloomberg Government's Jack Fitzpatrick says it may need 8 Democrats to get it through. Republican Senator Rand Paul has said he'll vote against the bill. The latest cuts to the federal government are coming at the Department of Education. Overnight, the DOE laid off more than 1,300 workers, now cutting the agency roughly in half. Education Secretary Linda McMahon saying those cuts are just the first step. President Donald Trump's increase on tariffs begins today on all steel and aluminum imports to 25%. The European Union has announced its own countermeasures, saying they will enter into force from April 1st. EU Commission President Ursula von der Leyen.
We are responding with countermeasures worth 26 billion euros. This matches the economic scope of the tariffs of the United States.
President Trump has separate tariffs on Canada, Mexico, and China, with plans to also tax imports from the European Union, Brazil, and South Korea by charging reciprocal rates starting April 2nd. The Trump administration says it will immediately lift its suspension of military aid to Ukraine and intelligence sharing with Kyiv. The announcement came after the measures were imposed to push Ukrainian President Volodymyr Zelensky to enter talks to end the war with invading Russian forces. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
And thanks so much, Michael. Greatly appreciate it. And now, folks, our first real discussion of March Madness. We do this with Paul Sweeney, and I get a lot of help on this. My bracket, Michael Barr, I think I did worse than you last year in my bracket.
It
was a battle.
It was, there was that one shining year that I did win, but that was way back, when the basketball had laces and all the other stuff.
Remember that? Yeah, without question, the joy for me is to see St. John's at number 6.
Yeah,
in the
how good is that?
poll.
Yep, it's great.
Everything else is secondary to that. Can they compete with the familiar names like Duke and Florida and even doing well this year, Alabama?
They can because of their coach. I mean, Coach Pitino's been there. He's done it several times here. So they've got some pretty good talent, and they've got a great coach, and they're on a great run. They're playing well together. And you know what's interesting? When they play in Madison Square Garden, they sell it out. The place goes nuts. I haven't seen it like that since the 80s.
Serious question, because, folks, I'm as ignorant. Good morning in the Czech Republic.
Oh, yeah.
I'm as ignorant as you are on March Madness. Do the teams all play the same basic game? Or when St. John steps on the floor, they're going to play a different game?
Yeah, some teams have different styles, sure. And different coaches have different styles. Some teams, like the old Syracuse teams, used to play with, a zone defense, whereas other teams like Duke play really hard man-to-man. But for our Bloomberg terminal users, BRKT is the function to know the brackets on the terminal. The bracket opens March 16th.
That's right.
After the
10 p.m.
weekend tournaments that we're all watching.
Exactly.
Yeah, and Sunday's Names Day.
Yep, exactly. So it opens up March 16th at 10 p.m.
And there's
Wall
always
Street
3 or 4 teams to get run over that they.
Yes, exactly. Yeah. That bust your bracket and you're out.
An old question: why does an Eastern team play in the Western bracket? I've never understood that. Of course, now it's all a topsy-turvy. Because like UCLA's play in Virginia or whatever.
Yeah, I have no idea how they do that.
It's nuts.
Yeah,
is it money? Is it like bribes?
Probably.
Seriously.
But I tell you, here's another great American tradition. Go out to Vegas that first weekend of the NCAA tournament when you got like 30 games going on at one time, and you go into a sports book, and all the games are up, and everybody's throwing money around. That is a fun bucket list.
Is that a surveillance road trip?
Sure, that's a bucket list item. Did that once. That was good fun.
Michael
the
Barr,
sports book at Caesars. Best place to be for that first weekend.
And is it stupid money like the Super Bowl?
Yeah, and it goes over a 2-week period, so it's not just a one day.
I love the beginning of it. The finals, I'm like, okay, whatever.
Yeah.
North Carolina State, you mentioned, did well.
Yeah, last year. Yeah.
But the first, it's 64, right?
But then there's a bunch of playing teams.
Well, then it's 68.
68, I think, yeah.
68, and then you get to Sweet 16. That into the second weekend, right?
Yeah.
Well, they hate the phrase play-in. But that's what it is.
Right.
At 68,
first
then you have
four,
to play in, and then and then they'll go down to 64, and then that's when the people say that's when the real deal begins.
I get a lot of Harry's Chocolate Bar, Fountain, whatever in West Lafayette. They call me, like Harry's. They call me up and they say, can you come out? Can we come out and talk Purdue basketball?
Sure, anytime.
And Purdue, I think they're like a play-in this year.
I don't know. I haven't been
they're
following
like
the
number
Purdue Boilermakers.
20. They're ranked number 20.
All right, so they're in. They're in.
They're in, really?
Yeah, sure. Oh, yeah.
You assume that?
Yeah. Oh, yeah, of course.
And then there's one. Do you have an Ivy League?
I saw Princeton play last weekend. They blew out Penn, so I'm sticking with my Princeton Tigers.
Your Ivy League. No one's over 6 feet. Hey, who cares?
Exactly.
There's your first March Madness. It is Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. Cooler than forecast February inflation leading to a rebound in the stock futures. S&P 500, NASDAQ 100, the Dow all rising this morning. Consumer Price Index rising at the slowest pace in 4 months. Goldman Sachs strategists lowering their target for the S&P 500 and lifting their view on European earnings. GE Aerospace says it plans to almost double its 2024 investment to nearly $1 billion in its U.S. factories and supply chains. Dow futures up 220, S&P futures up 56. That's a 1% rise. The NASDAQ futures up 292 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Joining us now, Callie Cox, to get the markets open here. We'll come back with her as well. Chief Market Strategist, Ritholtz Wealth Management. Callie, I can't stand, you write a research note, which I'm forced to read, it's so smart. And the problem I got is you break down this idiocy around the 200-day moving average, which I don't believe in, folks, just so you got it. What do we get wrong about in the media about the certitude of analyzing the 200-day moving average?
Well, Tom, I'm on the other side. I actually think that there is some signal around the 200-day. And I want to be clear, I'm not a technician. I don't look at many lines on charts. But when you're looking at the major moving averages, there has been a lot of resistance and support around the 200-day, especially in sell-offs. And unfortunately, we broke it. We actually broke it on Monday. So I call it the danger zone. I think that might be a little dramatic at this point because I would love to see the stock market or the S&P reclaim that. But for the moment, now that we are below the 200-day, I'm a little more worried about where this could go.
Tom, as you may recall, Callie is a proud graduate of the University of North Carolina, and her Tar Heels are playing today against Notre Dame in the ACC tournament at 2:30. So if you're planning on getting in touch with Callie around that time, she may not be available.
It may not be available.
She may not
be available. Understand.
Callie.
I knew this was coming. I knew this was coming. And these are important games. We got to make it to March Madness.
Got to make it. So, yeah, and I think the networks want North Carolina there as well. Callie, the last several weeks on this sell-off here, has it seemed orderly to you, reasonable to you, part of maybe a healthy pullback in a market that maybe wants to work higher if earnings come through? How do you think about the last couple of weeks of trading?
I think it has been a bit orderly, but in a disorderly way. And what I mean by that is that we've seen the bulk of losses in tech stocks. I mean, tech coming into this year has had an astounding 2-year run, which was great. You know, if you're a tech investor, you were happy up until the beginning of this year. But we've seen a lot of those tech shares that have done so well roll over in the past few weeks. And to me, that says that there's a bit of a cooling off here. It's not necessarily the sell-off we're seeing isn't necessarily a reflection of fundamentals. But at the same time, what worries me is that we are seeing some weakening and some cracks widening in the job market. So in a way, I like the fact that this has been a little disorderly. And again, I'm not, I don't love a sell-off where, you know, our stomachs are turning and our anxiety is rising. But the fact that it's been a little uneven has comforted me a bit.
I remember the comedy of we're in an intermediate bull market or intermediate trend and all that. Callie Cox, have we broken the bull market? I'm not hearing that within the zeitgeist. Is the bull market over?
I don't think you can say that until we see layoffs surge definitively. Because, I mean, Tom, you're an orator of history like I am. You know that bear markets often overlap with economic recessions. And if you're waiting for a recession, you need to watch for signals in the job market. And I don't think we're seeing that yet, even though the trend is turning that way. You know, we might be where we were several months ago where hiring is coming down, but companies may hold on to workers, not necessarily lay them off en masse.
Callie, one of the questions is, do we buy the dip? And I saw Citi, their trading desk out with their note. They're saying, don't buy the dip, but it was almost between the lines just yet. We're not quite there. How do you guys think about it?
Well, we serve long-term clients at Ritholtz, so our job is a little bit easier here. I mean, over time, we've seen over and over again that dips it's been smart to step in and buy the dips, especially around, this negative 10% correction level. But again, our clients are looking for over years and years and years. And of course, we believe that the story for the U.S. economy can still thrive because markets ultimately grow on earnings, economy, and innovation. But at this moment, if you're looking over the next week or month or so, I would get a little more defensive here. We're still trying to figure out what this policy story could look like. We're trying to figure out the extent of the job market damage. We got data today showing inflation is still quite tame. I just wouldn't try to be a hero in this environment. I wouldn't be the one trying to make big, bold trades.
We're going to come back with Callie Cox at Ritholtz right now, trying to get the market open. Here, again, there has been a sustained up all day, wrapped around just a few headlines that we've seen 2 hours ago, I will say. We are simply awaiting headlines on Bloomberg Radio this morning. Here's John Tucker.
All right, there you have it. The opening bell at the New York Stock Exchange right out of the gate. We are higher after we got that cooler than forecast February inflation print. The S&P 500 right now up 1%, 54 points higher, 56.26 on the index. The Dow Jones Industrial Average up 197 points. That's a 0.5% rise. NASDAQ 100 right now up 1.5%, up 294 points. Some of the individual movers, Tesla shares up 6.6%. NVIDIA, that's up 5.1%. Intel shares, they're moving higher, up close to 5%. And Groupon, after its results, 30% pop for shares of Groupon right now. Did get you talking about headlines. This one crossing the Bloomberg. Canada said to prepare retaliatory tariffs on $30 billion in Canadian dollars of U.S. goods. So we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker. That is your opening bell report, Paul and Tom.
Thanks so much. Dow up 222 points. We continue with Callie Cox of Ritholtz Wealth Management. You say you got a long-term perspective, Callie, as well. Help me here with the utilization of bonds. We've got people saying finally bonds have value. Do you buy it, or does equities, is there still enough growthiness in equities?
Well, I think at this moment, again, if you're looking over the coming weeks and months, you'll probably find some comfort in buying up those quality bonds, right? I'd say we're in a classic growth scare right now. We haven't seen a full slate of data that proves that, we're in a full-blown economic crisis, but the trends are turning the wrong way. And when you're in an economic downturn, treasuries are the classic sanity hedge, and they've proven to be that during this growth scare. So within the fixed income market, look at quality, maybe look a little bit longer term. We haven't seen that hedging activity be as strong as it has in past growth scares, but at the same time, treasuries have risen on the back of the sell-off.
So, Callie, how do you think about valuation here? Again, we've had this little bit of a correction here, roughly a 10% pullback in the S&P 500. Is there a valuation call to be made here, or you don't even kind of go there? Again, I know you guys are long-term, but a lot of folks they tend to look for some entry points, and valuation is one of the data points they look at.
Right. I think valuation matters a little bit less in this environment, and valuation matters, but you have to view it in context. I mean, right now, the S&P's valuation is still quite high historically, but a lot of that is because we've seen tech shares do so well over the past 2 years. And unsurprisingly, they're the part of the market that's been selling off the hardest. So I think if you're taking any lessons from valuation here, it's to, look toward those stocks that are a little more fairly valued in this environment. Stocks that hug their earnings a little bit closer than the tech and growth shares of the world. Right. We believe in value a lot at Ritholtz because we try to prioritize stability and consistency. But I think right now the lesson is not to take valuation at its face, but to look within your portfolio and understand where there are valuation differences.
Callie, thanks so much. Callie Cox, Ritholtz Management today. Greatly appreciated. And a really nice detailed note. Get her note from Ritholtz Wealth Management. Lift to the market. It is better than the futures of 20 minutes, 30 minutes ago. S&P up 1.2%, Dow up 232 points. NASDAQ sprightly ahead, 1.9% on the NASDAQ. And where you really see it, folks, the VIX is 25.21. Is that elevated, Paul? It's sort of like
a little bit. I mean, it gets your attention here, but we got the VIX down to 25. But again, anything above 20 gets your attention, and then when you get to 30, a lot of folks will say, all right, now
Okay,
I'm thinking about a
we
bottom
didn't
here.
get there. The
Yeah.
fact is, it's sort of an in-betweeny kind of thing. And again, waiting on the headlines. You had the Canada headline out moments ago. And, I'm with Paul at 10 o'clock here in 20 minutes. Wait and see. That's sort of when the headline day starts for diplomats and trade advisors and that. And stay with Bloomberg across whatever way you listen to us on Apple CarPlay, Android Auto. Good morning on Sirius XM, channel 121 across all of North America. On YouTube, a special thanks to Leland Miller on the Pacific Rim here with China Beige Book and Adam Posen.
Yeah, that was great.
China as well. We say good evening to you internationally on YouTube. Subscribe to Bloomberg Podcasts. That's the best way to see us. Bonus round, you get to watch John Tucker. From New York City, it's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks higher after the consumer prices rose at the slowest pace in 4 months for the month of February. That was the CPI increasing 0.2% after that sharp 0.5% increase the month before. About half of the advance in the overall measure that was due to shelter. S&P 500, 7 of the 11 major industry groups in the index are higher right now. It's being led higher by information technology and consumer discretionary. So those are home to NVIDIA and Tesla. NVIDIA shares right now up 7.2%. Tesla shares, after Monday's 15% sell-off, right now they are up 8.4%. You also have Groupon. That is one of the standouts in the early going so far this morning. Those shares are up 32%. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. In the heat of all this, have we totally ignored real estate? I think we've done a really good job.
Yeah, I mean, it's something that Alex and I, we stay on top of it all the time because, boy, talk about a sector that just got crushed with the COVID, but it's coming back.
It's coming back. Todd Henderson with us now, DWS, with a lot of experience here in commercial real estate. Have we cleared the office market, Todd Henderson, city to city in America? Have we finally cleared the market?
Good morning, Tom and Paul. I don't believe we've cleared the market from an office perspective. There's still a fair amount of office out there that is quite challenged, and the banks, in many cases, have not dealt with that challenge. However, what we are seeing is a pickup in leasing. We are seeing a pickup in capital markets activity for office at the highest quality end of the spectrum. And that points toward hopefully some, with a combination of getting back to work in the office across the country, I think that points towards some favorable days to come for the office market. But it will not be quick. It will continue to be slow moving. And frankly, what we're talking about are the office or the industrial sectors and the multifamily sector.
Sure.
So talk to us about multifamily and Todd, if you could talk to us about a housing shortage in this country. A, how did we get there? And B, how are we getting ourselves out of this?
Well, we got there through the easy money leading up to the global financial crisis. we were overbuilt, and as a result, home builders retrenched all through the following decade, and we ended up with a shortage of housing. How do we address the shortage of housing? We need a longer spot, frankly, to do it. But we think that the rental market is poised to capture a lot of the demand out there in the market today because, one, housing, for sale housing, is expensive to buy. It's also expensive to finance, and it is expensive to operate. And so what we saw last year is proof positive of that. Over the second largest number of multifamily units absorbed in the history of this country, at the same time that we were seeing construction starts fall and fall significantly. So we think that bodes well for investors in the residential sector. It doesn't necessarily bode well for the increase in supply in the marketplace.
Is the stereotype true that builders, whether it's single homes, multifamily, whatever, that they can only build for profit fancy places and like building up, Paul, like what we grew up in, basic stuff? I mean, Todd, can we not build for profit anymore basic housing or basic commercial properties?
The challenge, Tom, is the cost. The land cost is significant. We've seen significant increases in the cost of lumber. Tariffs are going to continue to increase the cost of the goods as well as the labor. And so it's very, very difficult to build the type of housing that I grew up in, that you grew up in. It's a challenge, and it's something that I think we need to figure out as a country, how to build affordable housing. But at the moment, the cost associated and the time that it takes to entitle these sites create tremendous cost, and it translates into a high cost for the consumer and a barrier of entry.
I see in your notes there, Todd, retail shopping centers have been the best performing private real estate sector over the last 2 years. That surprised me. I kind of thought that whole bricks and mortar thing was dead.
Well, it surprised a lot of people. And I think when you look at the retail sector, you have to look at the different subsectors of retail. And what we like about and why we like the retail shopping center, the neighborhood centers, the necessity centers, is they're very hard to disintermediate through e-commerce. It's a lot of service-oriented tenants, which again, don't lend themselves to distribution out of warehouses. And coming out of COVID, there has been absolutely no supply across the subsectors of retail. And so what you had as the consumers got away from more of a goods economy and back to a service economy, you saw a lot of spending and a lot of leasing in these neighborhood necessity centers. And that translates into their occupancies being as high as they've ever been and the rents being equally as high.
Todd, thank you. Todd Henderson, DWS, with us here. A quick update there on commercial real estate and multifamily as well. It's simple. The tape gives it back. We're at 9:46 Wall Street time. And we're up, I don't know, up 60, up 70. Just got red on the screen on the Dow. We're basically flat. It's that headline coming in, Paul.
Oh, boy.
I'm seeing it.
NASDAQ's still rocking, though, Tom. The tech stocks are up 1.7%. We're going to stick with that.
Right now, with your news in New York City, Michael Barr.
Thank you very much, Tom. Paul, John. Russia is gearing up to respond after Ukraine agreed to a 30-day ceasefire in talks with the U.S. and Saudi Arabia. Bloomberg's Greg Sullivan has more from Dubai.
The ball is now in Russia's court. We know a few things. One is that the reaction from Russia so far has been rather muted. We'll know a lot more soon as the U.S. envoy Steve Witkoff is expected to travel to Russia and meet with President Putin, so we might know more about their reaction from then.
Bloomberg's Greg Sullivan reports the outline of the ceasefire deal does not meet Russia's previous demands to stop the fighting. Russian President Vladimir Putin has repeatedly brushed aside President Trump's calls for a quick end to the fighting. The European Union has launched countermeasures against new U.S. metals tariffs, planning to impose duties on up to $28.3 billion worth of American goods. The EU will target politically sensitive goods in Republican-led states, including soybeans, beef, and poultry. It will begin consultations with member states to adopt additional lists of goods subject to tariffs. The Trump administration's Department of Education announced it's cutting nearly half its workforce. More than 1,300 people will be placed on administrative leave starting on Friday as President Trump begins the process of dissolving the department. North Carolina Democratic Congresswoman Alma Adams, who is on the House Education and Labor Committee, says that the layoffs will impact schools and students across the country.
We're talking about in Charlotte, Mecklenburg, about 40,000 students that will be kicked off the program for free lunch.
According to the announcement, the department will continue to perform congressionally mandated duties, including student loans, Pell Grants, funding for special needs students, and competitive grant making. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Maybe they pull back. Canada cuts interest rates. I think I could state expected. Quarter of a basis point down to a lower 2.75%. The Bank of Canada says, quote, warning signs trade war may disrupt job market recovery. You wonder if these are headlines we're going to see March 19th in Washington.
Well, Bloomberg's Mike McDonough is out on social media. The bacon, egg, and cheese sandwich index with coffee is now at $3.16, up 4.2% this month and 22.9% year on year. Egg prices up 19% on a monthly basis are the biggest culprit, while bacon is offering slight relief, down 3.5%.
Yeah, and finally, eggs. I noticed yesterday, eggs have finally rolled over. Nowhere back to where they were on trend, but maybe is it easier now to get eggs? I think it is than a week ago.
I guess it's just what you want to pay for them. But again, those sitting in front of a Bloomberg terminal, just go type in bacon, egg, and cheese, and this index will come up for you, and it's a surprising
We have an index
chart.
on the Bloomberg?
Sure we do. Absolutely. Absolutely. So we got it all for you there. So you've got the Bloomberg term. It's a great cocktail conversation piece. You bring up that index sitting at a bar, talk about everybody can relate to the bacon, egg, and cheese
I got
sandwich.
the BCB index, which is Ben's Chili Bowl down in Washington. 3 hot dogs,
Sure.
The whole thing, all the works, sauerkraut, the whole thing. Red and green on the screen, the market gives way. This is Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. I'm okay. So I'm starting my bracket. BRKT
KT.
go.
That's it. That's the way you go.
I'm distracted this morning. Ira Jersey's not distracted. He joins us right now with Bloomberg Intelligence on fixed income space. How is your world reacting, Ira, to our political festivities? I call it the trust market. It used to be commercial paper. It's fancy Ira Jersey stuff I don't understand. Is it stable or unstable?
Well, some parts of the market are stable. So the funding markets have been pretty resilient recently. So things like the repurchase agreement market and kind of all of that plumbing, Tom, that goes under the market and kind of unseen and unknown by many people. But when it breaks, you get 2008, right? So right now, that's not an issue. I think when looking at the Treasury market and its reaction to a lot of the news, we have been correlated a little bit with risk assets. But I think the thing that most people are a little bit surprised about, and we are a little bit too, is the fact that you haven't seen the Treasury market rally much further with risk assets being as volatile and as weak as they have been over the last couple of half dozen trading sessions or so. I think that's partly a reflection of the idea that we're not necessarily going to get the benefit of deficit reduction that President Trump wants, and at the same time, people are worried that there's going to be higher inflation, so they don't really want to be massive buyers of treasuries at these levels.
What did you think, or how did your market think about this CPI print here today, Ira?
Yeah, so initially, when the headlines came out, we had a pretty big rally in treasuries with 4 or 5 basis points in 10-year treasuries. But we've given all that back and a little bit more. And I think that that's partly a reflection on the idea when you dig under the hood that it doesn't look like any of the tariffs have actually infiltrated their way into the February data yet. So I think the market's kind of sitting on its hands when it comes to inflation. And you look at things like what inflation swaps have done, and yeah, they priced out a little bit of inflation, maybe 2 basis points of inflation over the next year. But that's still not saying that people think that there's going to be some kind of disinflationary trend here because the market or inflation did a little bit better in February. There's still a lot of doubt, right? And I think that's one reason why the Treasury market's kind of been in a 20 basis point range here and may stay that way until there's some certainty either on the monetary policy or the fiscal policy front, which we won't have. And we're still talking about whether or not we're going to have a real budget, which we won't have this year, it looks like. So we have to wait until the 2026 budget comes out for any kind of serious deficit.
Ira Jersey, the Bank of Canada just cut rates. Is that like an effortless thing to do? Like we could get that from the Fed March 19th?
Yeah, I don't think we'll get it from the Fed this year or this month, I should say. Certainly the Federal Reserve could cut rates in May. I think that the data is just good enough that the Fed won't feel compelled to cut interest rates. Canada cut rates because their economy in particular is going to be affected much more by tariffs than the U.S. is.
Yeah.
So when you look at most other countries, foreign trade and exports are a much larger part of their economy than they are for the U.S. The U.S., we're only talking about 9% of our economy is really based on exports, whereas in a place like Canada, it's such a large proportion that if they don't start cutting now, they might have to cut even more aggressively later.
Ira, thank you so much. Too quick a visit. Ira Jersey with us here today. What a show it's been this morning. I mean, Paul, we were up like 60 points.
Yep.
S&P.
Yep, we're up 28 here. The Nasdaq's still holding.
Like churning.
The tech stocks are still, which is what you like to see. To the extent we're going to see a pickup here, but again, let's see how this plays out throughout. We're just kind of one tweet away from another sell-off like we saw yesterday.
Have we had an Alex Steele sighting?
Yeah, absolutely.
Which is amazing because I don't know. Am I back in New York? Am I still in Texas?
No,
it's a TBD. I don't really know. Yeah.
We had a lot. She was interviewing everybody who's anybody down there.
It was 19 interviews in a day and a half.
Yeah.
And all of them were like super relevant. It was really fun.
Very cool.
Yes, very cool.
You're going to hear about that coming up here. And also, maybe it's headlines as well. We say good morning. He played guitar with Tom Petty. Mike Campbell, good morning.